Hello students, can you hear my voice? Do let me know in the comment section if my voice is clear, the video is clear. Is there any disturbance? Yes? Okay, that's amazing. So we've got approval from all our students. So should we begin today's session, students? Tell me, should we start today's session? Perfect, there's no disturbance, voice is clear. Okay, so let us begin with today's session. Hello Rockstars, I hope you're all doing amazing. I hope you're all excited for today's session. So with all your excitement, all your energy, all the good vibes and all your prayers, let us begin with the new chapter. And the chapter is going to be decision making. So decision making is one of the most important chapters from your examination perspective. So at the start of any chapter, let us first have a look at how questions have been asked by ICAI in the previous attempts. So this chapter has been one of ICAI's favorites when it comes to asking questions in the examination. At the very same time, this is also the same chapter which is the base for all the upcoming chapters. I can say 60 to 70% of practical questions in CA Final SCMPE are going to be solved on this concept of decision making. So firstly, let us have a look at the past examination analysis. So every attempt questions have been asked. May 18, 30 marks, 10 marks, question was not there. 15 marks, 15 marks, 20 marks, 20 marks, 15 marks, 15 marks. On an average, we have 16 marks in every attempt. I can easily say almost 1/6 of your marks will be from this chapter, decision making. So you know how important this chapter is from the examination perspective. So any chapter, be it simple, hard, important, unimportant, we are going to build it from scratch. Irrespective of if it is frequently tested, not tested, we are going to cover every concept right from the scratch till the very end. Do not worry on that. So let us begin with the chapter decision making. So as you guys would be knowing, we started with our stories. So let us start with our first story on decision making. This is the same story which I have told you guys yesterday, but let me repeat it again. All the short-term decisions are based on the concept of marginal costing. Marginal costing is something we have already studied in CA Inter, but let us try building from marginal costing again. So the basics of marginal costing, I will tell it to you guys with the help of a small story. So what is the story? Ramesh and Suresh, two friends, are staying together in a room. So the rent was 6,000 rupees. Both of them are equally sharing the rent. So per person, the rent comes to 3,000 rupees. Any doubts till now, students? Should we continue? Yes. Now comes a new person. Yes. Who is this new person? His name is Mr. Amanda from Uganda. Yes, he is going to be our hero for the complete chapter decision making. All stories are going to be connected with Mr. Amanda from Uganda. So Mr. Amanda wanted to stay with them, wanted to sit and study there. So he asked them, how much is the rent? So they are telling it is 6,000 rupees. So we three are there. So you have to give me 2,000 rupees per head. So it is going to be 2,000 rupees per head is what the other two friends are telling him. But Amanda is telling, I don't have cash right now. I'm facing certain financial difficulties. Can you please do one thing? I will pay you 1,000 rupees. Can you please allow me to stay with you guys? What should be the decision, students? Purely on a financial perspective, should we allow Amanda to stay with us or should we not allow Amanda to stay with us? Yes, students, everyone, live students, recorded students, live streaming students, tell me the answer. Yes, the cost per head comes to 2000 rupees. Amanda is only giving me 1000 rupees. Purely on a financial perspective. Should we allow Amanda to stay with us or should we not allow Amanda to stay with us? Tell me the answer, students. Yes, some students are telling allow. Some students are telling not allow. Yes, the students who had attended yesterday's class are telling allow. Some new students are telling don't allow. Yes, so the answer is going to be, what is the answer, students? We should allow Amanda to stay with us. Now the question comes, why? Look at this. All decisions should be based on the concept of marginal cost. So let us try to understand what is it. So there was Ramesh, Suresh, and we have Mr. Amanda. So we have total. Look at this, before and after. So before, Ramesh and Suresh were paying 3000 rupees and 3000 respectively. The total rent was 6000 rupees. Now Amanda wants to come here. Yes, what will be the total rent payable? What is the total rent payable to the landlord? The total rent payable will still be 6000 rupees only. There will be no increase in the total rent. What is Amanda telling? He is telling that I can give you 1000 rupees. That is the maximum I have. So what happens? Out of 6000 rupees total rent, 1000 is being contributed by Amanda. So the balance two people will have to contribute 5000 in total, which comes to 2500 and 2500. So on a purely financial basis, previously Ramesh was paying 3000 rupees, but now it is just sufficient for him to pay 500 rupees. So he is having a savings of 500 rupees. Suresh is also having a saving of 500 rupees. So what is the lesson we have learned? Every time we are taking a decision, decision should never be based on the concept of total cost. Decisions should always be based on the concept of marginal cost. Now, what was it? The total cost per head was 2000 rupees. 6000 rupees, we have split it into three people. So the total cost per head was 2000 rupees. But decisions should not be based on total cost. Decisions should be based on the concept of marginal cost. How much extra cost we are incurring. Look at this. Previously, they were incurring 6000 rupees. Now also they are incurring 6000 only. So what is the extra cost they are incurring? Zero. As against that, what is the marginal revenue they are getting? If Amanda comes in, how much is he giving? He is willing to give 1000 rupees. The additional cost we are incurring is zero, but the additional revenue we are getting is 1000. Marginal revenue is greater than the marginal cost. So the decision should be accepted. Is it clear, students? Yes or no? Should we continue? Everyone. Now, let us continue further. Let us take this story one step ahead. So, all of this is over. Now, next, he is asking, what are you guys doing for lunch? Amanda is asking, what are you guys doing for lunch? So, they tell, we have a mess nearby wherein the food cost comes to 3000 rupees per head. We go there, have a lunch. So the food cost is 2000 rupees per head. So again now Amanda is telling, bro, I don't have cash, bro. Will it be possible if I pay you 1000 rupees? Can you please make some adjustments? Now what should we do, students? The mess fees is 2000 rupees per head. Amanda is willing to give 1000 rupees. Should we take him? Should we give him the food or should we not give him the food? What should we do, students? Tell me, everyone. Tell me the answer, students. Should we allow? Should we not allow? No? Yes. Purely on a financial perspective, we should not allow him. Look at this. What was happening before? Previously, we were paying 2,000 rupees, 2,000 rupees. The total mess bill for 2 people was 4,000. If Amanda comes, so what is the mess person going to tell? 3 of you guys are having food, you have to pay me 6,000 rupees. So what is the marginal cost? What is the extra cost? 2,000 rupees is the extra cost. As against that, how much is Amanda giving? He's only giving 1,000 rupees. So should we take Amanda? No. If we take him, what will happen? 6,000 we have to give for mess. Amanda is only giving 1,000. So balance 5,000 we need to distribute amongst ourselves. So which comes to 2,500 and 2,500. Previously Ramesh was paying 2,000. Now he has to pay 2,500. He'll tell, no, I won't pay 2,500. So we should not accept the decision. Is it clear, students? Any doubts till now? Should we continue? Now, with this small story, let us begin our chapter decision making. Yes, the very basics of decision making. For all the students on YouTube who are looking for the notes would be uploaded on our Telegram channel immediately after the class. Yes, name of the Telegram channel is Think with Tabish. So you can get it from there. Okay, or if you want, you can also drop in a message on WhatsApp 83102468880. Details will be shared here as well. Now, the very basics of marginal costing, let us see. Yes. What are we telling? All short-term decisions should be based on the concept of marginal cost and marginal revenue. How should we take a decision? We should never take a decision based on the concept of total cost. We've already seen it might be misleading. So how should we take a decision? We should see what is the marginal cost we should pay. As against that, what is the marginal revenue we are getting? Now based on this, take a decision. So how do we take a decision, students? What is the decision making framework? If our marginal revenue is greater than marginal cost, my marginal revenue is 2,000, marginal cost is only 1,000. So what is the decision? Decision should be accepted. We accept the decision. But if marginal revenue is lesser than the marginal cost, marginal revenue is 1,000, but the marginal cost is 2,000, then what should we do, students? The decision should be rejected. Is it clear? Should we continue? Now, let us try to understand what is this marginal cost. Yes, we've got a basic idea of what is marginal cost, but let us try to understand the proper understanding. Yes, what is marginal cost? It is the change in cost due to the change in the level of output. What is marginal cost? It is the change in cost due to change in the level of output. To increase one output, how much extra cost I am incurring? That is my marginal cost. Say for example, yes, first case, when we were in the room, there were 2 people, the total cost was 6,000 rupees. When it became to 3 people, the total cost is again 6,000. So how much extra I am incurring? What is the marginal cost? It is 0. In second case, mess bill, 2 people were going. Yes, the mess bill was 4,000 rupees. Now 3 people went, the mess bill went increased from 4,000 to 6,000. So what is the extra cost we are incurring? 2,000 rupees. That is the marginal cost. Is it clear? So it is the change in cost due to change in the level of output. In other words, it is the extra cost we are incurring to manufacture 1 unit extra output. It is the extra cost we are incurring to manufacture 1 unit extra output. Yes. So we had already discussed cost includes variable cost as well as fixed cost. We add variable cost as well as fixed cost. We will be getting the total cost. Units, total cost. Yes. Suppose we are manufacturing 100 units. Our total cost is 7,000 rupees. If we are manufacturing 101 unit, our total cost increases from 7,000 to 7,050. So what is the marginal cost, students? Everyone, drop in the comment section. What is the marginal cost? What is the extra cost we are incurring? Tell me, students. It is marginal cost is going to be 50 rupees. Is it clear? Till now, any doubts? Yes. Now, we had already discussed cost includes variable cost as well as fixed cost. What is variable cost? It is the cost which varies with the change in the level of output. It is a cost which varies with the change in the level of output. As and when the output increases, the cost also increases. Yes, say for example, the cost of raw material. To manufacture one shirt, I want 100 rupee material. Two shirt, 200 rupees. Three shirt, 300 rupees. What is fixed cost? It is a cost incurred for a period. It does not fluctuate based on the change in the level of output. Yes or no? Say for example, rent 50,000 per month. I produce 1 unit, 10 unit, 100 units, 1000 units. It is going to be 50,000 only. So logically speaking, what will marginal cost include? Whether marginal cost will include variable cost? Yes, marginal cost will include variable cost, because when we are increasing 1 unit, the variable cost is increasing. That is what basically marginal cost is all about. Look at this. In simple terms, if I am telling, to manufacture one shirt, I have to incur 100 rupees material. Two shirt, it will be 200 rupees. So what is the increase in cost to manufacture one extra unit? It is 100 rupees. What is it basically? It is nothing but the variable cost per unit. So marginal cost includes the variable cost. Is it clear? But fixed cost, generally what we have observed, yes, still CA Inter, what we have learned, fixed cost is constant for a period. It is 50,000 per month, for example. I produce 0 shirts, 10 shirts, 20 shirts, 50 shirts, 100 shirts. It will be 50,000 only. The change in cost is 0. So ideally, the marginal cost here should be 0. Yes, so marginal cost in totality should be only the variable cost. This is what is a basic understanding. Yes or no, students? Should we continue? Now let us see what is actually the component of marginal cost. What all is included in marginal cost? Let us try to understand this. Yes, whether variable cost will form a part of marginal cost? Yes, variable cost will form a part of marginal cost, because it is the extra cost incurred to manufacture one unit extra output. Whether fixed cost will be included? Generally, no. But let us try to understand it properly, conceptually. Yes. I'll be giving you a small example. Okay. Yes. I'll be giving you my own case study. Yes. Suppose I'm taking classes for CA final on Zoom. I'm also giving the classes as recorded. So what all cost I'm incurring? I'm considering only two costs. One is the encryption cost, which is the variable cost. For every student, I have to encrypt the class, give them the serial key through which they can access the class. What is the cost? It is 1000 rupees per student. I know now all of you guys are having a calculation about my profit. Okay. Keep it a secret. Now, what is the variable cost? 1000 rupees per student. One student, 1000 rupees. Two student, 2000 rupees. Three student, 3000 rupees. So, marginal cost, it is 1000. Now, Zoom, fixed cost. I also want Zoom subscription to take the classes online. So, how am I paying for Zoom? Yes, for 1 year, I have to pay 10,000 rupees as subscription for Zoom. But in 10,000 rupees, how many maximum participants I can take? It is only for a maximum of 100 participants. I can take up to maximum of 100 participants. If I have 101 participants or more, I cannot take them. Then what I need to do? I need to upgrade my Zoom and go for the higher version, which costs me 25,000 per annum. Yes, in which I can take up to maximum of 500 students. Is it clear? Now, if I have, let us analyze our marginal cost in different scenarios. If I have 50 students, what will be my variable cost, students? It is 1000 rupee per student into 50 students, which comes to 50,000 rupees. What will be my fixed cost? To accommodate 50 students, 10,000 rupees Zoom is sufficient. So what will be my total cost? It comes to 60,000 rupees. Is it clear? Now, if I want one extra student, 51 student, now what will be my variable cost? For 51 students, I have to encrypt the class at the rate 1000 per student. It comes to 51,000 rupees. What will be the fixed cost? Zoom is again 10,000 rupees. So what is the total cost, students? It is 61,000. So what is the change in total cost due to change in the level of output? For one extra unit, for one extra student, how much extra cost I have to incur, students? I have to incur 1000 rupee extra. What is this 1000 rupee? This is basically nothing but my variable cost. Is it clear? Till here we already knew in CA Inter. There's nothing great in that. But continuing forward. Suppose I have 99 students. So what will be the variable cost, students? Yes, 1000 per student into 99 students. It will be 99,000 rupees. Yes, what will be the Zoom? Up to 100 students, 10,000 rupees is sufficient. So what will be the total cost? 1,09,000 rupees. If I have 100 students, 1000 per student into 100 students goes to 1 lakh rupees. Yes, again up to 1,100 students, maximum 100 students I can accommodate. So my fixed cost will again be 10,000 rupees. So what will be my total cost? 1,10,000 rupees. What is my marginal cost? How much extra I am incurring for one extra student? It is 1,000 rupees. What is this? This is nothing but my variable cost. But pay attention now, students. If I have 101st student, what will happen? My variable cost is 1,000 per student into 101 students, 1,01,000 rupees. What happens to my fixed cost? Whether 10,000 is sufficient now? 10,000 was only for 100 students. Even if I have one extra student, I have to go for a higher Zoom subscription which costs me 25,000 rupees. What will be my total cost, students? It comes to 1,26,000. Now what is the extra cost I am incurring for that one extra student? Tell me, students, everyone. What is the extra cost? It will be 16,000 rupees. Huh? New, right? Yes. How did we get 16,000 rupees? Yes. It includes 1,000 rupees, which is the variable cost. Yes or no? Change in the variable cost, 1,000 rupees. And previously, I was incurring only 10,000 rupees. But from 100 students, if I have to switch to 101 student, how much extra fixed cost I have to incur? Previously, it was only 10,000. Now it has increased to 25,000. So I need to incur an additional of 15,000 rupees as my fixed cost. So what will be my marginal cost, students? It is going to be 16,000 rupees. So what all is included in marginal cost? Marginal cost includes variable cost. It also includes additional fixed cost or specific fixed cost, which is taken specifically for a decision. Is it clear, students? Look at this. So what all is included in marginal cost? We have variable cost. We also have additional fixed cost or the specific fixed cost that also forms a part of marginal cost. Now look at this. We ask if production is in the same capacity level. If production is in the same capacity level, then fixed cost will not form part of marginal cost. Yes or no? Capacity level, if you are looking in a graph from 1 to 100 students, my fixed cost is 10,000. The moment I increase it to 101, it will jump to 25,000. So if it is in the same capacity level, whether it is my marginal cost, am I incurring extra cost per student? No. But when I jump from one capacity level to other capacity level, what is going to happen, students? Yes, additional fixed cost will also form part of marginal cost. Is it clear? Any doubts till now, students? Should we continue? Yes. Now, There is one more component which forms a part of marginal cost, that is opportunity cost. Now, you would have heard the term, you would have not heard the term, doesn't make a difference. Let us try to understand it from scratch. Suppose I am a company, I can manufacture only one product. I have two options, either I can manufacture a shirt or a jeans, not both. So either I can manufacture a shirt or a jeans, not both. At present, what am I doing? At present, I am selling a shirt. Yes, by selling a shirt, how much contribution or how much profit I am earning? I am earning a profit of 600 rupees. Now, if I want to manufacture jeans, yes, if I want to manufacture jeans, what I have to do? I have to sacrifice the manufacturing of shirt. I cannot manufacture shirt plus jeans both simultaneously. At present, I am manufacturing shirt and I am getting 600 rupees profit or contribution. Now, if I have to manufacture jeans, yes, what is the variable cost of manufacturing I am incurring? 1300 rupees I am incurring. Additional fixed cost, there is no additional fixed cost. Now, tell me how much minimum selling price should I get so that I can manufacture jeans? What is the minimum selling price I should be quoting for which I can accept to sell the jeans? What should be the minimum offer price? Tell me, students, how much minimum I should get? What is the minimum amount I should get? Is it 1300 or is it something else? Yes, some people are telling 1900. Is there any other answer? Okay. Let me ask you in another way. Suppose there is an offer from a customer. He is telling, I will give you 1600. You don't manufacture shirt, you manufacture jeans and give it to me. Should I accept his offer or not? Should I accept his offer or not? What should I do, students? Should I accept? Should I not accept? Yes, I should not accept his offer. Why? What all I am incurring? See, if I take the decision to manufacture jeans, what is happening? The 600 rupees which I was earning previously, now I cannot earn it. I am losing that. That is my opportunity cost. So that bare minimum I want. Additionally, 1300 also I am giving to manufacture. So bare minimum I want 1900 rupees. Only then I will accept the manufacturing of jeans. Is it clear, students? What is opportunity cost? We will discuss it in detail later on. But opportunity cost will also form a part of marginal cost. Is it clear? Yes, suppose a customer is giving me an offer of 1600 rupees. If we think of it plainly, if there was no opportunity cost, yes, my variable cost is 1300, I am getting 1600, 300 rupees profit. But think of it, previously I was getting 600 profit. Now at least 600 profit I should get. Yes or no? Otherwise, what is the point? Yes, so opportunity cost will also form a part of marginal cost. Is it clear, students? Any doubts? So marginal cost means three items. One is the variable cost, one is the additional fixed cost, one more is the opportunity cost. We add the three, we will arrive at our marginal cost. Is it clear, students? Any doubts till now? Add opportunity cost, if any. We add the three, we will arrive at our marginal cost. Is it clear, students? Yes. Suppose I am going for a job wherein I am getting 20,000 rupees per month. So a new company is calling me. He is telling, come for my job. Yes, I will give you 15,000 per month. Will we accept? No. Suppose he is agreeing to give me 25,000 per month. Now what am I telling? How much extra I am getting? 5,000 only extra I am getting. 20,000 I was getting previously as well. So when we are taking decision, what we are telling? 600 contribution I was getting when I was manufacturing jeans as well. So now I want more than that. So this bare minimum 600 I want. So 1300 variable cost I am giving, that I should recover. 600 previously I was getting, which I cannot get, that also I should recover. So bare minimum I want 1900. Is it clear, students? Any doubts till now? Yes, should we continue? Okay. So we have the three basic assumptions of marginal costing. Yes, which we had already seen in CA Inter. unless otherwise specified. If nothing is given, what do we assume? We assume that selling price per unit is constant, variable cost per unit is constant, and the total fixed cost is constant. Three things: selling price per unit is constant, variable cost per unit is constant, and the total fixed cost is constant. Only based on these assumptions we can solve the questions. Okay, next. While we are solving questions of marginal costing, what we need to do, we are not looking at cost as on a standalone basis. We bifurcate costing. What is the variable cost? What is the fixed cost? Again, in fixed cost, we see if there is any incremental or additional fixed cost. Based on this, we are going to solve the questions. So this was the very basics of marginal costing. We are discussing the first concepts, basics of marginal costing. In that A, yes, we have discussed the basics. Firstly, we have told how do we take decision, students? Yes, we look at our marginal cost, compare it with marginal revenue. Marginal revenue is higher, we accept the decision. Marginal revenue is lower, we reject the decision. Now, what is marginal cost? What all is included, students? Firstly, we have our variable cost. It is the extra cost incurred to manufacture 1 unit extra output. What all will be there? We will be having our variable cost. Again, we will also be having the additional fixed cost. Remember the Zoom example. Again, if there is any opportunity cost which we are losing, that should also be recovered. So that will also form a part of our marginal cost. Is it clear, students? Yes. Now going to our next concept, concept 1B, we are going to have a look at our basic formulae. Basic formulae of marginal costing. Yes, I know you would have all learned these formulae in your CA Inter. I know you would have all forgotten these formulas after that. Don't worry, we will develop them from scratch. Again, no by hearting of any formulas. We will develop everything conceptually. Is it clear, students? So let us move into the next concept, which is going to be our basic formula. Yes. So our hero, Mr. Amanda, yes, his friends, his old friends, yes, did not give him the permission to stay. So he decided, I need to do something. I have to become something. So he was just roaming around in the street. So he came across a shop where this was written, a cloth shop, a shirt shop wherein this was written. You can buy the shirts at 600 rupees and sell it at 1000 rupees. A very good business opportunity for you guys. So what is Amanda thinking? He wants to make money. So what is he thinking? If I sell one shirt, how much will I get, students? Yes, if Amanda sells one shirt, if he sells, he gets 1000 rupees. To purchase, he has to give 600 rupees. How much is there with him? 400 rupees. If he shirts, yes, he is going there, he is looking, see, he is thinking, if I sell one shirt, yes, I will get 400 rupees. If I sell 10 shirts, 400 rupees per shirt into 10 shirts, 4000 rupees. If I sell 100 shirts, I'll get 40,000. So much money. I'm going to become rich. What is this, students? What is this 400 rupees? This is the contribution that he is going to get. So how do we arrive at contribution, students? It is sale minus variable cost. Yes, what is the basic logic of contribution? It is how much net cash you are getting by selling one unit. Look at this. Assume this is the cash box. Okay, so we've made some things for you. Yes. Suppose, yes, we are selling shirts. Okay, the moment a customer buys our shirt, how much he gives us? The moment we sell, we are getting 1000 rupees. But to purchase, how much we should have paid to the supplier? Yes, to purchase, we should have paid 600 rupees. Now, how much net is there with me in my pocket? How much net is there with me in my pocket? 400 rupees per shirt. That is my contribution. Is it clear, students? So what is contribution? It is sale minus variable cost from the definition perspective. But from the logic perspective, what is it? If I'm selling one unit, how much net cash I am having in my hand? By selling one unit, how much net cash I am having in my hand is my contribution. Is it clear, students? Yes. Now, yes, so what is contribution? Look at this. It is the amount which contributes towards recovery of fixed cost and profit. Okay, it is excess of sales over variable cost. So what is contribution? Contribution is sale minus variable cost. Is it clear? Yes. Now, next thing, wait for a minute. Okay. Yes. Let us try to understand contribution from a different perspective. Okay, so in marginal costing, we have understood the golden formula for costing. What did we tell? Sales minus total cost is equal to profit or loss. Yes or no? Yes. In marginal costing, how we are going to tell? We are not going to tell it that way. Yes, every decision is based on marginal cost. So how we are telling? We'll tell sales. Total cost will include variable cost as well as fixed cost. So first I will reduce my variable cost, I will reduce my fixed cost, I will arrive at my profit. Is it the same thing? Assume sale was 1000 rupees, variable cost was 400, fixed cost was 300. Yes, so total cost was 700, profit was 300 rupees. I write sale 1000 minus variable cost 400 minus fixed cost 300. Again, I'll be getting my profit as 300 rupees. Now, what am I doing, students? Look at this. I will tell sale minus variable cost 1000 minus 400. Yes, I write it as contribution. 600 rupees is my contribution. Now from this I reduce my fixed cost of 300. Again it will give me the same profit of 300 rupees. This is how everything is done in marginal costing. This is the format of marginal cost sheet. What we are going to do? From sale, we first reduce our variable cost. How much net is left with us? That is our contribution. From this we pay off our fixed cost. Whatever is left net will be our profit. Is it clear, students? Any doubts? Should we continue? Now, so one formula of contribution is equal to sales minus variable cost. Yes or no? We also have another formula of contribution. What is it? Contribution minus fixed cost is profit. Look at this. I had a contribution of 600 rupees. From this I paid 300 rupees. So my net profit is 300 rupees. What is the formula? Contribution minus fixed cost is equal to profit. So can I tell contribution is equal to, take fixed cost to the other side, fixed cost plus profit. Yes or no? So can I also tell how much contribution I have earned totally? Yes, it is the profit. Net how much is there with me? 300. Again, how much fixed cost I have paid? 300. So total contribution I had earned. So I had earned 600. From this I paid 300 and net 300 is there with me. So contribution also means it is fixed cost plus profit. Is it clear, students? Any doubts till now? Should we continue? Now, same thing. Let's move to the next concept. Okay. Next is variable cost ratio and PV ratio. Yes. So, same example, let us continue, students. What is our selling price? Our selling price is 1000 rupees. So, we are selling a shirt at 1000 rupees. Now, to purchase this shirt, how much we have to pay, students? Variable cost we had to pay was 600 rupees. So, we purchased the shirt, we paid 600. We sold, we got 1000. So, what is the contribution we got, students? The contribution we got was 400 rupees. Yes or no? Now, what is this variable cost ratio and PV ratio? Variable cost ratio, what am I trying to tell? I am telling how much is my variable cost as a percentage of my sale. Yes, my sale is 1000 rupees. My variable cost is 600 rupees. So, how much percentage is my variable cost as a percentage of sale? How much percentage is it, students? How much percentage is my variable cost? Tell me, students. Yes, my variable cost is going to be 60% of my sale. Yes or no? Yes, that is nothing but my variable cost ratio. What am I telling? What is my variable cost ratio? How much is my variable cost as a percentage of my sale? As a percentage of my sale, that is my variable cost ratio. I am telling, yes, if my sale is 1000, my variable cost is 600, which comes to 60%. Now, what is PV ratio? Yes, how much is contribution as a percentage of my sale? It is 40%. So, how did I get it? It was 400 divided by 1000 into 100. So, what is this? I am telling how much is my contribution as a percentage of my sale. And what do we call it? We call it our PV ratio, profit volume ratio. So, in simple terms, what is variable cost ratio? It is percentage of variable cost to sales. What is PV ratio? It is percentage of contribution to sales. So, in this case, my variable cost ratio is 60%. My contribution ratio, PV ratio is 40%. If I add the two, how much will I get, students? I will always get 100%. Why? Because if I add my variable cost and contribution, I will arrive at my sale. Yes or no? Look at this. Sale minus variable cost is equal to contribution. So I take variable cost to other side. So what will happen? Contribution plus variable cost. So obviously, if I take contribution as a percentage of sale plus variable cost as a percentage of sale, if I add the two, it should always be 100%. So suppose I am telling my variable cost ratio is 70%. That means my contribution ratio, my PV ratio is 30%. If I am telling my variable cost ratio is 50%, that means my contribution percentage is going to be 50%. If I am telling my variable cost is 20%, that means my contribution will be 80%. Is it clear, students? Should we continue? Look at this. Yes, both are compared as a percentage of sale. What is variable cost ratio? It is the proportion of variable cost to sales. So I will tell it is variable cost divided by sales into 100. Now what is my profit volume ratio? It is the proportion of contribution to sales. That is, I can tell it is contribution divided by sale into 100 will be my PV ratio. And both of them are complementary. That means I know one, I can calculate the other. That means my variable cost ratio and my PV ratio, if I add the two, I should be getting 100%. Suppose my variable cost is 70%, that means my PV ratio is 30%. My variable cost ratio is 85%, that means my PV ratio is 15%. My variable cost ratio is 90%, that means my PV ratio is 10%. Is it clear, students? Should we continue? So whenever we are going to write it as a percentage, look at this, always make it a point. Yes, sale will always be 100%. Yes or no? Variable cost, it is 600 when my sale is 1000 rupees. So it is going to be 60%. So what is my contribution, students? It is 400 when my sale is 1000 rupees. So it is going to be 40%. Sale is 1000 rupees on my sale of 1000 rupees. So obviously sale is going to be 100%. So always make it a habit whenever you are writing. Yes, whenever we are going to solve the basic questions, always write it in terms of percentage. Sale will always be 100%. So based on that, calculate how much percentage is variable cost, how much percentage is contribution. Is it clear, students? Should we continue now? Yes. But till now, everything that we thought, we had completely ignored our fixed cost. Yes or no? Yes, what we saw. Yes, if one customer comes, I will sell at 1000 rupees. I had purchased at 600. On one customer, I am getting 400 rupees. But I have to incur certain fixed cost as well. Suppose I have to incur 10,000 rupees fixed cost. Now, what I am thinking is fixed cost, rent 10,000, right? Upfront, let me think of it as my investment. Slowly, I will keep recovering. So, what I am thinking, look at this. So 10,000 at the start of the period, I want to premise on rent. So at the start of the period, I've paid 10,000. Now I'm thinking is from every shirt sold, I'm going to get 400. So one customer comes, he purchases a shirt. How much I've got? 400 rupees contribution I've got. Next customer comes, he purchases a shirt. How much I've got? I've got 400 more contribution. Yes. Next customer comes, how much I've got? 400. First customer comes, yes, 400 I've got net in my hand. Next customer comes, 400 I've got net in my hand. Third customer comes, 400 I've got net in my hand. Now what am I thinking? Yes, initially I've paid 10,000 from my pocket, right? Yes, I want to recover this 10,000. Or else think of it this way, our landlord told, yes, pay it at the end of the month. At the end of the month, you pay me 10,000 rupees. So how much contribution I want in total? Yes, I'm thinking initially I don't want profit, but I don't want loss as well. I want to recover my complete cost. So how many units should I sell? How much fixed cost I have to pay students at the end of the period? I have to pay 10,000 as my fixed cost. If I sell one shirt, how much cash I'm getting? 400 rupees cash I'm getting. So how many shirts should I sell so that I will be in a position to pay off that fixed cost? So that I will be reaching my break even point, so that I will reach the no profit no loss situation. Tell me students, think of it and tell me. Yes, 25 shirts. Okay. Yes, if we sell 25 shirts, we will reach our break even. That is no profit, no loss. Okay, look at it. Marginal cost sheet format is also over. Variable cost ratio. Okay. Now what we are telling, on every shirt I am getting 400 rupees, but I want that contribution to pay for my fixed cost. So how much shirts I should sell? Look at this. If I sell one shirt, I will get 400 rupees. Altogether, how much I want? Altogether, I want 10,000 rupees. So how many shirts should I sell? It is 10,000 divided by 400. It is going to be 25 shirts. Yes or no? This is my break even point. So if I sell 25 shirts, yes, on 25 shirts, on every shirt I am getting 400, 400. First shirt I got 400, 400, 400, 400, 400. For 25 shirts, I got 400 into 25, 10,000. I have my complete contribution. I will tell, yes, now I have 10,000. I have paid my fixed cost. Yes, now there is no profit, no loss. Is it clear, students? That is my break even point. So let us try to understand break even point as well. Yes, what is break even point? It is a situation of no profit, no loss. At break even point, we will not earn profit, we will neither incur loss. In other words, the entire fixed cost is being recovered at BEP. That is, it is a situation wherein my total cost is equal to total sales. At BEP, three things are going to happen. At BEP, my profit or loss is going to be zero. What does that mean? Sales minus cost, that is my profit will be zero. So what is the meaning? That means I take cost to the other side. That means my sale will be is equal to my cost. Yes or no? So at BEP, three things are going to happen. Look at the students. At BEP, I can tell three things will happen. First is my profit or loss will be zero. What is the second thing? That means my sale is equal to total cost. My total sales will be equal to my total cost. And at the same time, I can also tell my contribution will be equal to my fixed cost. Yes or no? I have earned a contribution of 10,000 rupees, 400 rupees per shirt into 25 shirts. I earned 10,000 rupees. Now I am paying from this 10,000 rupees. I am left with nothing. So my contribution was also 10,000. My fixed cost was also 10,000. So my profit or loss is again zero. So third part, let us look at it this way. Look at the students. If I am not selling any units per unit, yes, same example, 1,000 rupee per shirt we are getting. 600 is our variable cost, 400 is a contribution, 10,000 is a fixed cost. In terms of percentage, variable cost will be 60%, contribution is going to be 40%. If I am not selling any units, my sales would be zero, my variable cost would be zero, my contribution would be zero. Still, I had to pay this fixed cost of 10,000. What will be my loss, students? I would be incurring a loss of 10,000. If I've sold one shirt, I got 1,000 rupees. My variable cost is 600. I got a contribution of 400. So what I'm telling, yes, in this I have 400, but I have to pay altogether 10,000. So I have to pay 9,600 from my pocket. So 9,600. If I'm selling two shirts, 2,000 will be my sale, 1,200 will be my variable cost, 800 will be my contribution, 10,000 will be my fixed cost, 9,200 will be my loss. I'm telling, for two shirts, I have 800 rupees net savings. So 800 I can take from here, but 9,200 I want to pay from my hands. But if I sell 25 shirts, What will be my sale, students? 25,000 will be my sale. What will be my variable cost? 600 rupee per shirt into 25 shirts. 15,000 rupee will be my variable cost. I sell 25 shirts. I have a contribution of 10,000 with me. From this contribution of 10,000, I pay my fixed cost of 10,000. Is anything left with me? Nothing is left with me, but there is no loss as well. So what is break-even point? It is the point at which profit or loss is zero. That is, it is the point where total sale is equal to total cost. Total sale is 25,000, total cost 15 plus 10, 25,000. Again, it is that point where contribution is equal to fixed cost. My contribution was 10,000, my fixed cost was 10,000. Is it clear, students? So how do we arrive at break-even point in terms of units? Very simple formula. Look at this, students. Understand things logically. What I have told, if I sell one shirt, how much I have got? 400 rupees I got it as contribution. Yes, to reach no profit, no loss. How much contribution I want? I want 10,000 rupees contribution from which I can pay my fixed cost. So how many shirts I should sell? 10,000 rupees total I want, divided by, for every shirt I am getting 400 rupees, it is going to be 25 shirts. So 10,000 rupees total I want, for every shirt I am getting 400 rupees, so it is going to be 25 shirts. So if I write it down as a formula, what is 10,000, students? It is my fixed cost. Total how much I should recover? 10,000. Divided by what is 400, students? It is a contribution per unit. For every unit how much I am getting? 400. This will give you the break-even point in terms of units. Is it clear? Any doubts till now? Should we continue, students? Now, next thing that we have is break-even point in terms of sale value. Yes, I know obviously you guys might be having an idea of all of this, but it is my duty to ensure that we start from the scratch. Even the basic of the basic things, I explain it to you because some people may not be knowing. Okay, so this one lecture is going to be on the basics of marginal costing. From next lecture onwards, we are going into the advanced topics. Don't worry on that. Yes, now break-even point in terms of sale value. Now I want to know how much rupees sale if I do, I will reach my break-even point. How do I get to know? I know that I have to sell 25 shirts. If I sell 25 shirts, I will arrive at my break-even point. I know that every shirt I will be selling at 1,000 rupees. So what is my sale value, students? I have to sell 25 shirts. Every shirt I am selling at 1,000 rupees. So my sale value should be 25,000 rupees. Break-even point in terms of rupee is going to be 25,000. Now let us try to understand how did we get the formula. What is 25 shirts? It is BP in terms of units. Yes or no? What is 1,000 rupees? It is the selling price per unit. We have arrived at BP in terms of rupees. Now BP in terms of units. How many units should we sell? How did we get it? It was fixed cost divided by contribution per unit. Yes or no, students? Into selling price per unit. Yes. Just pay attention. It's going to be simple logics. Now, you would have learned long ago that if we have A divided by B into C, we can also write it as A divided by B divided by C. You don't believe maths? Good. I also don't believe maths. Let us try it with the help of numbers. Okay, let us try it with the help of numbers. Suppose I am telling 1 divided by 2 into 3. How much it is going to be? Yes, logically if you see 1 into 3, 3 divided by 2 is going to be 1.5. What is it telling? I can also write it as A, B, this is going to be C. A divided by B divided by C, 2 divided by 3. 1 divided by 2 by 3, how much it is? 2 by 3, 0.666666. So 1 divided by 0.6666, take it to the very end on your calculator. Yes, how much is it, students? It is going to be 1.5. So maths is correct. There is no problem with maths, right? Yes, so now let us look at this. A divided by B into C. I can also write it as A divided by B divided by C, contribution per unit divided by selling price per unit. Yes or no? Now, what is this? This is going to be fixed cost. Contribution per unit divided by selling price per unit. What is it, students? It is nothing but my PV ratio. Yes or no? Look at this. If my sale is 1000 rupees, variable cost was 600, my contribution was 400. I am telling how much percentage is my contribution divided by my sale. This is contribution divided by sale. It is nothing but my PV ratio. So I will write this is nothing but my PV ratio. So what is the formula for break-even point in terms of value? It is going to be fixed cost divided by PV ratio. Is it clear? This was the proper derivation of the formula. There is also a simple, short, simple way to get that as well. I will explain it, don't worry. Yes. So what is break-even point in terms of rupees? It is fixed cost, is total how much we should recover, divided by PV ratio. Is it clear? Yes. Now let us try to understand it very simply without taking any difficulties, without bringing A divided by B divided by C. Yes. I will tell selling price, contribution per unit. Contribution. Okay. Suppose, same example, 1000 rupee is the selling price of my shirt. Yes, 400 rupees is my contribution. Suppose if I tell the selling price of my shirt is 1 rupee, then how much will be my contribution, students? I know, I've calculated that my PV ratio is 40% of sale. It is 40% of sale. So if I make a sale of 1 rupee, how much should be my contribution? It should be 40% of 1. That is going to be 0.4. Yes or no? So if I make a sale of 1 rupee, yes, my contribution will be 0.4 rupees. In total, how much contribution I want to pay off my fixed cost? How much total contribution I want? How much total contribution I want, students? I want a total contribution of 10,000 rupees from which I can pay off my fixed cost. So what should be the sale value? Yes, cross multiplication. It is going to be 10,000 divided by 0.4. What is 10,000? It is fixed cost. And what is 0.4? It is PV ratio. So simply also we have got the answer. Yes, BP in terms of rupee is nothing but fixed cost divided by PV ratio. Is it clear, students? Any doubts till now? Yes, so let us quickly revise whatever we have studied till now. Yes, first we have understood the basics of decision making. We have told every decision should be based on marginal cost. So what we do? We look at marginal cost, compare it with marginal revenue, take a decision. Marginal revenue is higher, we accept the decision. Marginal revenue is lower, we reject the decision. Next we have told what all is included in marginal cost. We told in marginal cost we have our variable cost. Next we also have the additional fixed cost. And if there is any opportunity cost, that also will form a part of our marginal cost. Is it clear? Yes. Next we are looking at our basic formulas. Firstly, we have told the formula of contribution. Contribution. What is contribution? In simple terms, how much net cash I am having by selling 1 unit. It is the excess of sale over my variable cost. Contribution is equal to sale minus variable cost. It is also equal to fixed cost plus profit. Next I have told my selling price, I can bifurcate it as variable cost and contribution. Percentage of variable cost is called as variable cost ratio. Percentage of contribution is called as PV ratio. I add the two, it will always be 100%. So if I know one percentage, other percentage can be calculated. Clear? Next, break even point. Break even, there is no profit, no loss. That means my profit or loss is 0. That means my total sales is equal to my total cost. That means the contribution that I earn is equal to the fixed cost I have to pay. Now, how do I calculate BP? BP calculation happens in two different ways. BP in terms of units, BP in terms of rupee value. BP in terms of units, how many units should I sell? Yes, so what am I telling? Yes, total how much I want. Total I want 10,000 fixed cost divided by selling every unit, how much I am getting? 400 contribution per unit. So break even point in terms of units is going to be fixed cost divided by contribution per unit. And BP in terms of rupees, it is fixed cost divided by PV ratio. Till here, any doubt, students? Should we continue? Yes. How's the Josh? How's the energy, students? Break-even point in terms of units is going to be fixed cost divided by contribution per unit. It is going to be fixed cost divided by PV ratio. So if you have to write BP in a single line, you can write it is fixed cost divided by contribution per unit or PV ratio. If you divide by contribution per unit, you get break-even point in terms of rupees. Yes, if you divide by contribution per unit, you get BP in terms of units. If you divide by PV ratio, you get it in terms of rupees. Is it clear? Should we continue? Now, next concept is going to be margin of safety. What is margin of safety? In very simple terms, pure layman terms, what is margin of safety? It is nothing but the sale over BEP sale. Yes, look at this. Do we have our PPT? Yes, we have our PPT. Okay. Yes, look at this, students. Yes, we started selling our shirts 1, 2, 3, 4, 5. Here we have our contribution box. Yes, we have sold 25 shirts. Yes, by selling 25 shirts, what is the total sale value we got? Every shirt we sold at 1,000 rupees, so 25,000 we earned. This was the profit. This was the point at which we were in no profit, no loss. We sold one more shirt. We sold 26 shirts. What is the total sale value? 26,000. So what will I tell? How much more I have earned over my BP sale? How much extra I have earned over my BP sale? 1,000 rupees. This is my margin of safety. So what is margin of safety? It is nothing but the sale in addition to break-even sale. After BP, how much we have sold? That is my margin of safety. Now what is going to happen in margin of safety? Look at the students beautifully. Yes. So on every sale, how much am I getting, students? On every sale, I am getting a contribution of say 400 rupees. So look at this. Assume this is going to be my contribution. Yes. On every sale, I am getting 400 rupees. I sell 1 unit, 400. 2 unit, 400. This way I go on selling. I sold 25 units. How much I have in total? 400 rupee per unit into 25 units. I have 10,000 rupees. Yes, now I have reached no profit, no loss situation. From this, I have paid all my fixed cost. I have paid all my fixed cost. Now there is no tension of fixed cost. Now I sell my 26th unit. On selling my 26th unit, I sell it at 1,000 rupees. I am incurred a variable cost of 600. How much net contribution I am getting? 400 rupees. What is this contribution going to be? I have paid off all my fixed cost. Now there is no tension at all. The contribution I get here will be my profit. Is it clear, students? Yes, so what did we tell? The contribution that we earn from our margin of safety sales will form a part of our profit. Why? Because we've already paid our fixed cost. Yes or no? By selling 25 shirts, we have created 10,000 rupees, which is required for paying off our fixed cost. I sold my 26th shirt. I got 400 extra. Now what am I thinking? Party, this is my profit. Yes or no? So on every shirt, I am getting 400. So by selling 25 shirts, which was my BP, how much I have earned in total? I have earned altogether 10,000, which is equal to my fixed cost. Whatever I earn over and above that, it is going to be my profit, because now there is no other cost. Because in contribution, I have already reduced my variable cost. So variable cost is already taken care of. Fixed cost I have already paid. So whatever is left will be my profit. So from margin of safety sales, whatever I get will be my profit. Is it clear, students? Any doubts? So try looking at it this way. Yes, margin of safety. Suppose I have sold 100 shirts. So first 25 shirts. Yes, we tell those were our struggling days. Whatever contribution we earned, we had to pay our fixed cost. But the day we reached 25 shares, all our tension went away. After that, whatever we have earned, whatever contribution we got was our profit. Altogether, suppose I am selling 1000 shares. So I will tell my BEP sale here is 25,000. My MOS sale is going to be 75,000. Look at it in terms of contribution. Yes, on every shirt I am getting 400. So if I sell 25 shirts, so 25 shirts into 400 per shirt, I got 10,000 rupees. I keep it aside, telling from this I will pay my fixed cost. Now 26th customer is coming. I am telling, please come, please come. You are my profit. I love you, my dear. Yes or no? 26th customer, 27th customer, 28th customer. Every customer is giving me, yes, 400. Additionally, 75 customers came. Altogether 100 customers have come. So what will I tell? How do I calculate my profit? I will tell, yes, I have 75 customers after my break-even point. Every customer gave me a contribution of 400. So 75 into 400, 30,000 is going to be my profit. Is it clear, students? Any doubts? Yes. So total sale of 1 lakh, we can bifurcate it as break-even sale of 25,000 and margin of safety sale of 75,000. Okay, this one we'll discuss. Yes, so our total sale, yes, assume our total sale was 1 lakh rupees. We bifurcate it telling this is my BEP sale, and over and above that is going to be my MOS sale, margin of safety sale, 75,000. Now, whatever is the contribution we earn from break-even sales, look at this, for break-even, look at this, students. Yes, 25, next 75 shirts. Yes, from first 25 shirts, I got 400. I got altogether 10,000 rupees contribution. Yes or no? What will I use it for? I am going to use it to pay off my fixed cost. Now there is no more fixed cost. So on these 75 shirts, whatever is the contribution I get, 400 per shirt into 75 shirts, 30,000. What is it going to be? This is going to be my profit. So I will tell, yes, the contribution from BEP sale it will be equal to my fixed cost, and the contribution I earn from my MOS sale will be equal to my profit. Is it clear? Yes. Now, one more thing, we have MOS sale ratio and BEP sale ratio. Yes, we start earning profit from the point of MOS sale till BEP sale, we were just recovering our fixed cost. Now, what is this BEP sale ratio and MOS sale ratio? Yes, what is my total sale, students? 1 lakh. In that, how much is my break-even sale? 25,000. How much percentage it is of my total sale? It is 25% of my total sale. Yes or no? How do I get it? It is BEP sale. Yes, how much in terms of percentage? It is 25%. I will tell it is BEP sale divided by total sale into 100 will give you the BEP sale ratio. Yes, MOS sale ratio, how much is it, students? Yes, it is 75,000 on my total sale of 1 lakh rupees. So it is going to be 75%. I will tell it is MOS sale divided by total sale into 100. It is going to be my MOS sale ratio. Again, if we add both, BEP sale ratio is 25%, MOS sale ratio is 75%. If we add the two, how much do we get, students? It will always be 100%. So BEP sale ratio, it is the proportion of BEP sale to total sales. I will tell it is BEP sale divided by total sale into 100. This is the BEP sale ratio. What is the MOS sale ratio? It is the proportion of MOS sale to total sale. It is MOS sale divided by total sale into 100 will be the margin of safety sale ratio, and both of them are complementary, that is BP sale ratio plus MOS sale ratio will always be equal to 100%. Is it clear, students? Any doubts? Now let us have a look at the bifurcation between BP sale and MOS sale, and from that let us take an observation. Yes, so we are selling a shirt at 1000 rupees, variable cost is 600, fixed cost is 10,000 rupees. We have sold altogether 100 units. Now in terms of percentage, sale will be 100%, variable cost 600 on my sale of 1000 is going to be 60%, contribution is going to be my 40%. In total, how many shirts I've sold, students? I've sold 100 shirts. Yes or no? So what will be the total sale value? 1000 rupee per unit into 100 shirts. It is going to be 1 lakh. What will be my variable cost? 600 per unit into 100 shirts, 60,000. So what will be the contribution? 40,000. So altogether, by selling 100 shirts, I've got 40,000. From this, I have to pay 10,000 fixed cost. What will be my profit, students? What will be my profit? My profit is going to be 30,000 is the net profit that I have in my hand. Is it clear, students? Now, if I have to bifurcate it as BP and MOS. Now, break-even point. I will tell what is break-even point. It is the point at which profit or loss is zero. Yes. It also means that whatever is my fixed cost, that I am able to recover through my contribution. I have earned 10,000 contribution from which I can pay this 10,000 rupees fixed cost. Now look at this, students. Total how much contribution I want? 10,000 rupees. If I sell 1 unit, how much will I get? 400. So how many units should I sell? It is going to be 10,000 divided by 400 is going to be 25 units. You don't want any formula. You can do it logically, or else look at this. Yes, how much total contribution I want? 10,000. What is contribution as a percentage of sale? 40%. So if I do a sale of 1 rupee, contribution is 0.4. Now how much contribution I want? 10,000. So what should be my sale? 10,000 divided by 0.4. My sale should be 25,000. This way also we can get. Now I've got that my break-even point is 25 units. Every unit I'm selling, I'm getting 1,000 rupees. So if I sell 25 units, it is going to be 25,000. I'm selling 25 units. Variable cost is going to be 600. So my variable cost will be 15,000. Contribution will be 10,000. From that, I've paid my fixed cost of 10,000. My profit or loss is zero. Is it clear? Any doubts? Okay. Now, margin of safety. What is margin of safety, students? It is the sale over break-even sale. Altogether, I've sold 100 shirts. In that first 25 were for break-even point. So after that, whatever 75 shirts I've sold, that is my margin of safety. So I've sold 75 shirts. Every shirt I've sold it at 1,000 rupees. So how much I've got? 75,000 is my margin of safety sales. Or else look at it this way. Total sale is 1 lakh. In that 25,000 is break-even point. That means the next 75,000 is margin of safety. Is it clear? 75,000 is my MOS sale. In that my variable cost, it is 600 per shirt into 75 shirts. How much is it, students? 45,000 is my variable cost. So next I got 75,000 sale, 45,000 is the variable cost. I got a contribution of 30,000, but now should I pay anything? Whatever I wanted to pay, I've already paid. So my fixed cost, additional fixed cost in MOS will be zero. So I will be earning a profit of 30,000 rupees. Is it clear? This is how the total column we have bifurcated between BP and MOS. What is that important observation? Look at it, this, students. Yes, at BP, the contribution that we earn, yes, at BP, the contribution that we earn will be equal to my fixed cost, and at MOS, the contribution that I earn will be equal to my profit. Yes or no? We know that my total contribution, it is nothing but fixed cost plus profit. Sale minus variable cost is contribution minus fixed cost is profit. So I can tell contribution is fixed cost plus profit. In that from BEP sale, whatever contribution I get is for my fixed cost. From MOS sale, whatever contribution I get is for my profit. Now, look at it this way as well. Suppose the same thing I have to develop. Okay, from a different perspective. Yes, look at this. Total how much profit I have got? 30,000. So I will tell this 30,000 profit I should have got from my MOS sale, because till BEP I reach no profit, no loss. Now, in MOS, my fixed cost is going to be 0. Why 0? See, what we are doing, we are artificially splitting a period. In a period, altogether how much fixed cost was required, that is already being paid by my BEP sale. Now there is no additional fixed cost. Total 10,000 fixed cost I had to pay. That already BEP sale has arranged for that. Now additionally there is no fixed cost. So how much contribution I should earn? If I earn 30,000 rupees contribution, it is sufficient. From my MOS sale, if I earn 30,000 contribution, that means my profit will be 30,000, because my fixed cost is going to be 0. Now, altogether I want a contribution of 30,000. If I sell one shirt, I will be getting a contribution of 400. So how many shirts should I sell? 30,000 divided by 400 per unit. I should be selling 75 shirts. Is it clear, students? I hope my speed is okay. It's not too fast. It's not too slow. Yes. Now again I can tell I'm selling 75 shirts. Every shirt I'm selling at 1,000 rupees. So my revenue will be 75,000. I'm selling 75 shirts. Variable cost per unit is 600. So my variable cost is 45,000. So my contribution is going to be 30,000. This way also we can do. Yes, believe me. Yes, there are n number of ways through which we can solve the question without even knowing single formula. Only if you know the basics, the logics, you can develop the formulas by yourselves. Is it clear, students? Yes. Now we have an important observation. Okay. Now pay attention, students. For the next 1 or 2 minutes I will tell total sales into PV ratio is going to be my total contribution. Is it correct? Yes or no? Assume my total sale is 1 lakh rupees. In that my variable cost is 60,000. My contribution is 40,000. What is my PV ratio? It is 40%. So can I tell 1 lakh rupees into 40% will give me my contribution of 40,000? Yes, PV ratio is nothing but contribution divided by sales. So I can tell, take sale to the other side. Sale into PV ratio will be equal to contribution. Is it clear, students? Now, in total sales, what all we have? We have BEP sale. Yes, total sale I can bifurcate it as BEP sale. I also have my MOS sale. Again, in my total contribution, total I've got 40,000 contribution. From this I pay 10,000 fixed cost. I'm still left with 30,000 profit. So in my total contribution, what all will I be having, students? I have my fixed cost. I have my profit. So what I will tell is BEP sale. Yes, whatever is the BEP sale, if I multiply it with my PV ratio, the contribution that I get will be equal to my fixed cost. And from my MOS sale, whatever is the PV ratio I multiply, I will be getting my profit. Is it clear? Yes, look at this. Total 1 lakh was my sale. In that my BEP sale was 25,000. So out of 25,000, 40% is my contribution. That means 10,000 contribution I got. That is going to be towards my fixed cost. And my MOS sales, 75,000. From this 40% PV ratio I am getting. That means 30,000 contribution, which will be equal to my profit. Is it clear, students? Any doubts? Yes, if you have not noted, note it down. Should we continue? Yes. Okay, just take a screenshot if you have not written already. Okay, all these. Yes, we have two simple notes. What we are telling is, yes, recovery of fixed cost. This is note number 1. Okay, from this table. Yes, I have a very bad habit of spoiling everything clean. Okay, so what we want here is two notes are there. Wait, give note number 1 here. And the second one is contribution. Okay. Yes, note number 1. What is note number 1 telling? The recovery of fixed cost. Yes, what is it telling? Yes, we are telling why are we writing at margin of safety fixed cost is 0. MOS is a sale in addition to BEP sale. In addition to BEP sale, what we are doing the sale, that itself is MOS sale. The complete fixed cost is already recovered in BEP sale. So there is no additional fixed cost. That is why when we are going to write MOS sale in the fixed cost column, we are writing it as nil. That means that the additional fixed cost is going to be nil here. And what is the contribution we get? Contribution from total sale will be equal to fixed cost plus my profit. From my break-even sale, whatever is the contribution I get will be equal to my fixed cost. From my MOS sale, whatever is the contribution I get will be equal to my profit. I hope it is clear, students. Yes, now we are moving into, yes, we have 1 or 2 last items in the basics. After that, we'll take a break. After that, we'll come back. We'll solve few basic questions. Yes, after that, we'll go into the next technique, which is going to be relevant costing technique. Now, sales to achieve desired profit or loss. Amanda, they say, human wants are unlimited. We feel that one want is sufficient. Yes, if one dream is achieved, it is enough. Once it is achieved, we want the next dream. Yes or no? So, where did Amanda begin his journey? He was thrown out from his room. Then he felt, I just want to start a business from which I can recover my fixed cost. I can stay peacefully. Now he is thinking. Yes, what is Amanda thinking? Amanda is telling, I want a bullet of 2 lakh rupees. I want to go happily in a bullet of 2 lakh rupees. So we want a profit of 2 lakh rupees. So how much contribution we want, students? Look at this same business. They are into the business of selling shirts. They are telling, I want a profit of 2 lakh from which I can buy my bullet. So if I want my profit of 2 lakh, how much should be my contribution? Yes, tell me the answer, students. How much should be my contribution? Think and tell me whether 2 lakh contribution is sufficient or I want more. How much contribution is required, students? Yes, I want a contribution of 2,10,000 rupees. Why? Look at this. If I get a contribution of 2 lakh, I am having 2 lakh here. I have to pay 10,000 fixed cost. So what will be left with me? Only 1,90,000. I don't want that. I want 2 lakh to be left with me after paying my fixed cost. What is my fixed cost? My fixed cost is 10,000 rupees. So I will tell. If I get a contribution of 2,10,000, so what I will do? From this 10,000 fixed cost I will pay, I will be left with the profit of 2 lakh. This I will take, I will buy a nice bullet for myself. Is it clear, students? Now how much contribution I want? I want a contribution of 2,10,000 rupees. If I sell one shirt, how much contribution I am getting? 400 rupees. So how many shirts I should sell? 2,10,000 is the total. Look at this, one shirt. I am getting a contribution of 400. How much total I want? 2,10,000. So how many shirts I should sell? 2,10,000 divided by 400. I should be selling 525 shirts. So if I sell 525 shirts, every shirt I am selling at 1,000 rupees. I will get 5.25 lakh as my revenue. 525 shirts, every shirt variable cost is 600. So 3,15,000 will be my variable cost. So my contribution will be 2,10,000. From this I pay off my fixed cost of 10,000. I will be left with my profit of 2 lakh rupees. Is it clear, students? Any doubts? So what we are doing, sales to achieve desired profit or loss. Yes, either we can do it this way by preparing a marginal cost sheet, or else what I want to calculate my desired contribution. What is my desired total contribution that I want? Obviously, first I have to pay fixed cost. Additionally, how much profit I want, that is the total contribution I want, divided by contribution per unit. I get how many units should I sell. Or if I divide it by PV ratio, I am telling, yes, total I want 2,10,000 rupees. If I make a sale of 1 rupee, 0.4, 40% is the contribution. So total what should be the sale value? 2,10,000 divided by 0.4, 5,25,000. So how do we arrive at sales to achieve desired profit or loss, students? Look at it. Sales 1000, variable cost 600, fixed cost 10,000, desired profit is 2 lakh. Calculate the units to be sold and the sales to be made. Look at this. For all the basic questions, this is the format you should follow. No matter how hard the question is, without even knowing a single formula, you will be in the position to solve. We are going to solve the questions in the second part. You will understand. Yes, sales minus variable cost contribution minus fixed cost profit or loss. Write down the data per unit, write down the data in terms of percentage, go on solving. Now sale is going to be 100%, variable cost will be 60%, contribution will be 40%. Now what we want a profit of 2 lakh rupees. So if you want a profit of 2 lakh, before we arrive at our profit, we have to pay a fixed cost of 10,000. That means we want a contribution of 2,10,000 rupees. So we want a contribution of 2,10,000 rupees. By selling 1 unit, we get 400. So number of units we have to sell is going to be, how much was it, students? 525 units. Now again the same way, if you want to arrive at the sale value, yes, I want 2,10,000 rupees. PV ratio is 40%. So 2,10,000 divided by 40%, 5,25,000 is my sale value. What is my variable cost? I guess it was 3,15,000. This is how we arrive at that. So sales to achieve desired profit or loss. Yes, firstly we want the desired contribution. How do I arrive at desired contribution, students? It is fixed cost plus my profit. That is my desired contribution divided by, if we divide it by contribution per unit, we arrive at number of units. If we divide it by PV ratio, we arrive it in terms of rupee sales. I hope it is clear. Yes. Any doubts till now, students? Yes, it is 7:30. We have 1 or 2 small points left, so we'll take it for 10 more minutes. Yes, but before that, whatever we've studied till now, let us try to quickly revise. Yes, first basics, we've told every decision should be based on marginal cost. Compare marginal revenue with marginal cost, take the decision. Now, what all is included in marginal cost? We have variable cost, specific fixed cost or the additional fixed cost, and opportunity cost. Next, we are discussing the basic formulas. Firstly, contribution, how much net cash I am having, sale minus variable cost. It is also equal to fixed cost plus profit. Next, my sale, I can bifurcate it as my variable cost and contribution. Percentage of variable cost to sale will be my variable cost ratio. Percentage of contribution to sale will be my PV ratio. I add the both, it will always be 100%. Next, break even point. Yes, it is the point at which no profit, no loss. That is my fixed cost will be equal to contribution, total sale will be equal to total cost. How do I arrive at my break even point? BEP in terms of units, it is fixed cost, total how much I should get, divided by contribution per unit. By selling 1 unit, how much I am getting. Or in terms of rupee, if you want, it is fixed cost, total how much I want, divided by PV ratio. If I am making a sale of 1 rupee, how much rupee contribution I am getting. We will be getting it in terms of BEP in terms of rupees. Next, margin of safety. It is the sale in addition to BEP sale. So total sale we bifurcated as BEP, MOS. BEP sale percentage is called as BEP sale ratio. MOS sale percentage is called as MOS sale ratio. We add the both, it will always be 100%. So what is going to happen, students? The contribution that we earn from our BEP sale, whatever we get, it will be for payment of fixed cost. So BEP sale into PV ratio will always be fixed cost. Now we have paid our fixed cost, there is no tension at all. From MOS sale, whatever contribution we will get, that will be towards our profit. So contribution from BEP sale will be equal to my fixed cost, and contribution from my MOS sale will be equal to my profit. Is it clear? Next we have discussed sales to achieve desired profit or loss. I want a profit of 2 lakh. But before I get a profit of 2 lakh, I have to pay this fixed cost of 10,000. So altogether, I want a contribution of 2 lakh 10,000. By selling 1 unit, I get a contribution of 400 rupees. So how many units should I sell? So 2 lakh 10,000 divided by 400, I got it as 525 units I should sell. So sale value also, if you want, it is desired contribution divided by PV ratio. Is it clear, students? Any doubts till now? Yes, let us continue. Okay. Now, we have discussed too many formulas, right? Do you feel you will forget the formulas? Should I tell you a secret? There is no need to remember or by heart even a single formula. Yes, we have understood all the formulas logically, we have not by hearted. But still, there is no need to even remember the formulas. Just remember the concepts. What is contribution? How much net cash I am having? What is variable cost ratio? How much percentage is variable cost? What is PV ratio? How much percentage is contribution? Just remember the concepts. We will be in a position to create the formulas the way we want. I will explain you the format. Yes, based on that, after the break, we are going to solve questions one by one, one by one, one by one. Now, magic box, I call it the magic box. It is one single box to solve all the questions. Now, look at this. Always we should write the marginal cost sheet format. Sales minus variable cost will be equal to contribution. From that, I reduce my fixed cost. I will arrive at my profit or loss. Two columns which are compulsory. One is the per unit data. One more is the percentage data. After that, depending on the question, you will be in a position to do it. Now, look at this. Yes, sale is 1000 rupees. Variable cost is 600. So, my contribution is 400. Whatever data is available, write it. If not, keep it blank. Now, in terms of percentage, sale will always be 100%. How much percentage is variable cost? It is 60% of sale. So, how much percentage is contribution? It is 40% of sale. Now, type 1 of question. Okay, fixed cost is going to be 10,000 in total. Yes, type 1 question. It may ask you to split the total sale between BEP and MOS. Suppose it is telling you altogether we have sold 100 shirts. Now calculate and tell me how much is my BEP, how much is my MOS. Too many calculations we have done, but for now forget all the formulas. Just to do it logically. Yes, suppose I have sold 100 shirts. Every shirt I am selling at 1000 rupees. What will be the total sale value, students? 100 shirts into 1000, 1 lakh. I have sold 100 shirts. My variable cost is 600. What will be my variable cost, students? 60,000. What will be my contribution? 40,000. What will be my fixed cost? 10,000. What will be my profit? 30,000. Now I have to split it. I have to calculate and tell what is my BEP sale, what is my MOS sale. Now look at this, students. Total my profit is 30,000. What is break even point? It is the point at which profit or loss is 0. So at BEP my profit is 0. That means my complete profit I would have earned in my margin of safety. Is it clear? I hope you guys are following. Now let me calculate break even point. What am I telling? At BEP my profit or loss is 0. Net I don't have anything, but I have paid my fixed cost. So to pay my fixed cost of 10,000, how much contribution I want, students? I want a contribution of 10,000. If I have a contribution of 10,000, I pay 10,000, net I have 0. Is it clear? Yes. So I want a contribution of 10,000 rupees. Look at this. I want a contribution of 10,000 rupees. If I sell 1 unit, I get 400 rupees. So how many shirts should I sell? 10,000 divided by 400, I should be selling 25 shirts. Yes, we have not used the formula at all. Directly looking at the data, we are deriving them, 25 shirts. Yes, now how I got 25 shirts? It is 10,000 divided by 400. What is 10,000? Fixed cost. What is 400? Contribution per unit. We've got the formula ourselves. It is going to be 10,000 divided by 400. Sorry, fixed cost divided by contribution per unit. If you want in terms of sale value, look at it. It's simple. 10,000 I want. Yes, total contribution. Yes, how much is contribution as a percentage of sale? 40%. So if I do a sale of 1 rupee, I will be getting 0.4 rupee as my contribution. So if I want 10,000 rupees, how much sale should I make? 10,000 divided by 0.4, 25,000 is going to be my sale value. Now, 25,000 will be my sale value. How much is my variable cost? It is 60%, 60% of my sale. So if I made a sale of 25,000, 60% of that, 15,000 will be my variable cost. So I got a contribution of 10,000. Simple. Now, look at margin of safety. Two different ways in which we can see. Total sale was 1 lakh. In that BP was 25,000. That means my MOS is going to be 75,000. So based on this, MOS is 75,000. In my margin of safety, I have to make a sale of 75,000. For 1 unit, I will get 1,000. That means how many shirts I should sell? I should be selling 75 shirts. There are 10, 20 different approaches in which we can solve this. Okay, you may be getting the answer in various approaches. It is fine so long as you're getting the answer. Now 75,000 is a sale value. How much is the variable cost? 60% of this. So 75,000 into 60% will be 45,000 rupees. So how much is the contribution left? 30,000 rupees. Should you pay any extra fixed cost? No. Fixed cost is already paid. So fixed cost is 0. Profit is 30,000 rupees. As simple as that. Is it clear? This is one variant wherein question would give you the data, ask you to bifurcate between BEP, MOS, all of those things. Is it clear, students? Okay. Now, the other variant could be, yes, question would just ask you how much sale you should make to achieve your desired profit. Suppose question is telling I want a profit of 2 lakh rupees. So how much sale should I make? What am I telling? Before I get my profit of 2 lakh, I should pay my fixed cost of 10,000. So I want a contribution of 2 lakh 10,000. So I'm telling if I sell 1 unit, I get 400. So to get 2 lakh 10,000, how many units should I sell? 2 lakh 10,000 divided by 400, I should be selling 525 shares. One shirt I am selling at 1,000 rupees, so it is going to be 5.25 lakh. Yes, for every shirt, 600 is a variable cost, so it is going to be 3.15 lakh. Yes, so no matter how the data is, you will be in a position to solve it if you write down the data properly. The biggest challenge in marginal costing, the basic questions, is not that we don't know the formula. It is just that we don't know which data is available and which data is to be used when. So if we write down all of them properly and we observe, we will be getting the answers automatically. Is it clear, students? Any doubts? Yes, should we continue? Yes, we have two notes. First, variant 1, it is bifurcation of total sale as BP sale and MOS sale. Yes, variant 2, when question asks us to calculate sales to earn the desired profit. Few notes we have given. These are the few things to be kept in mind. Obviously not very relevant from your CA final examination perspective. But we are setting the foundation based on which we are going to develop things. That is the only reason why we are working on this. Okay. So what all notes we have given here, students? First one, what we are telling. Yes. PV ratio and variable cost ratio are complementary. If one is known, other can be calculated. Suppose question is telling my variable cost ratio is 25%. That automatically means my PV ratio is 75%. Is it clear? So if we know one, other can be calculated. Now, at break-even point, my profit or loss is going to be 0. So contribution will be equal to fixed cost. Look at the students. I will erase, or I will try erasing all the extra. Yes, what was the note 1 telling us? Note 1 was telling variable cost ratio and PV ratio is complementary. So if you know one, other can be calculated. You can write it down properly, note one. What is the second item telling? At BEP, profit or loss is 0. That means my contribution will be equal to my fixed cost at BEP. Note 2. What is my note 3 telling? At MOS, additional fixed cost is 0. So the contribution I earn there will be equal to my profit. At MOS, my additional fixed cost is 0. So the contribution I earn here will be equal to my profit. Third, and what is the fourth one? Is begin with the desired profit and add fixed cost to arrive at the desired contribution. If you divide it by that, we arrive at the desired sales. Yes. Yes. How do we calculate this even without the formulas? This is what was given here. I hope things are clear, students. Any doubts? Yes, let us revise one final time. Take a small break of 15 minutes. Come back, solve few basic questions. Yes, go to the next level. Is it clear? With this, these are the basics. Yes, which you had studied and forgotten in your CA inter. Yes or no? Yes. So what we have told, basics of decision making. Decision is based on marginal cost. How do we take a decision? Compare marginal cost with marginal revenue. Marginal revenue is higher, accept. Marginal revenue is lower, reject. What all we have in marginal cost? Variable cost plus specific fixed cost plus opportunity cost, if any. Yes. Next we went to the basic formulas. Yes, contribution. What is contribution? How much net cash we are having? It is the sale minus variable cost. It is also equal to fixed cost plus profit. Next we have told sale we can bifurcate it as variable cost and contribution. Percentage of variable cost is called variable cost ratio. Percentage of contribution is called as PV ratio. Next we have told break even point where there is no profit, no loss. Yes, that is my how much fixed cost I have to pay, that much contribution I have earned. How do we arrive at that? BEP in terms of units. Yes, how much I should pay? Fixed cost divided by 1 unit, how much I get? Contribution per unit. So fixed cost divided by contribution per unit, we arrive at our BEP in terms of units. Yes, next one, BEP in terms of rupees. How do we arrive at that, students? BEP in terms of rupees, it is going to be fixed cost divided by PV ratio. Next, margin of safety. It is the sale in addition to BEP. After BEP, whatever is the sale I make, that is my margin of safety. So total sale I can bifurcate as BEP MOS, BEP sale percentage, MOS sale percentage. From BEP sale, whatever is the contribution I earn, that will be equal to my fixed cost. From MOS, I have already recovered my fixed cost. Whatever is the contribution I earn will be equal to my profit. Sale to achieve desired profit or loss. Yes, desired profit plus fixed cost will be my desired contribution. Now compare it with your PV ratio or contribution per unit, arrive at the desired sales. This is what we had learned till now. Any doubts till now, students? Yes, should we take a break? Yes, let's take a break of 15 minutes. It is 7:44. Exact at 8 o'clock, we will continue the session. We will come back. We will solve all these basic questions. Yes, there is one more small concept left here, that is differential formulas. That also we will discuss. After that, we will begin with the next technique, which is relevant costing technique. Relevant costing technique is very important. Yes, that is the beginning of your CA final syllabus. But to begin that, all this was required. Yesterday's session on basics of costing and today's session on basics of marginal costing was required. Yes, from there, we would have properly developed the foundation based on which we are going to start our CA final SCMPE. Is it clear, students? Yes, so it is 7:45. So exactly at 8 o'clock, we will continue the session. We will keep it as it is. Okay. Thank you, students. Do we have an option to pause this? I guess we can pause. Should we continue the session, students? Everyone. So welcome back after the break, students. So before break, we have discussed two concepts. Firstly, we've discussed the basics of decision making. What we have told, how do we take a decision? Yes, one thing, students, I have a very bad habit. Yes, I have a very bad habit of repeating the things I've told. Every chapter that I tell, bare minimum of 5 to 6 times I revise. Yes, at the end of the concept I revise. Before solving the questions, once I revise. At the end of the day I revise. At the start of the next day I revise. At the end of the chapter I revise. And all together, yes, one marathon revision will also be there. So every concept, a bare minimum of 6 times I will revise it for you, so that every term, every item is fixed in your mind. But in addition to that, you should also go back, study, revise it by yourselves. So if you keep revising, what happens is the time taken will get reduced. Now we've taken 1.5 hours to understand the entire thing. How much time will it take for us to revise? Maximum 3 minutes. 2 minutes is sufficient. So look at this. Yes, basics of decision making. How do we take a decision? We should never take a decision based on total cost. We should be taking a decision only based on marginal cost. How do we take a decision? Compare marginal cost with marginal revenue. Marginal revenue is higher, accept. Marginal revenue is lower, reject the decision. What is marginal cost? Three things. One is variable cost, one is additional fixed cost, and if there is any opportunity cost, that will also form a part of our marginal cost. Next, the basic formulas. Yes, what all we have? Firstly, contribution. What is contribution, students? It is sales minus variable cost. How much net cash I am having in my hand? It is also equal to fixed cost plus profit. Next, sales, I can bifurcate it as variable cost, contribution. Variable cost percentage is called variable cost ratio. Contribution percentage is called as PV ratio. Next, break even point. No profit, no loss. How do I get? It is total contribution, that is the total fixed cost divided by contribution per unit. BEP in terms of rupees, if you want, it is fixed cost divided by PV ratio. Next, margin of safety. It is a sale in addition to BEP sale. After BEP, whatever is the sale I am doing, that is going to be my MOS sale. So from BEP sale, whatever is the contribution that I get, it will be equal to my fixed cost. From MOS sale, whatever is the contribution I will get, it will be equal to my profit. Clear till here? Yes. After that, we've discussed sales to achieve desired profit or loss. What should we do, students? Yes. Start with the desired profit. Suppose I want a profit of 2 lakh. Before I arrive at my profit, I have to pay my fixed cost. So what is the total contribution? Fixed cost plus desired profit will give you my total desired contribution divided by contribution per unit or PV ratio. We will arrive at our sale value. Is it clear? Now let us start solving the questions. Just wait a minute, I forgot to upload the practical questions booklet. Let me do that. Yes, just wait for a minute, students. It is a big file, so it's just taking some time to get uploaded. Okay. Yes, so we have a smart question booklet through which we'll be in a position to solve our questions very quickly. Yes, now decision making. We are going to cover every question in ICAI source. Yes, ICAI is having two different materials. Yes, one is the main study material in which we'll be having the illustration questions and test your knowledge questions. Additionally, ICAI has recently released its case study booklet, wherein there are some additional skill-based assessment questions which are also going to be the practical questions. These are the practical questions. Each and every question will be covering. In addition to this, we'll be having a case studies. So for case studies, in the main textbook, we have case studies and case scenarios. Yes, case scenarios are basically smaller than the case studies, and in the additional booklet, again we have the additional case studies and additional case scenarios. Everything we will be covering in a target of 120 hours, each and every question. So every concept we have a different booklet for case studies. Now basics, there are no questions. Even for the basic formulas, there are no questions. Question will start from the relevant costing technique. But just to get a basic idea, just to get that grip, yes, we have picked some questions from our CA Inter textbook. This is just for our knowledge purpose. We are going to understand, solve it today. Yes, one day before examination, there is no need to revise because these questions are not going to come in the examination. But the foundation is required, based on which we are going to go into the next level. So look at this, students. Suppose we have a watch manufacturer. What is a watch manufacturer doing? He is selling the watch at 2000 rupees. Yes, to sell the watch, he has to purchase the variable cost. The cost at which he has purchased is 1200. So what is the contribution, students? How much net he is getting? Contribution is 800 rupees per watch. What is the fixed cost? He has to incur a fixed cost of 8 lakh. So what all is required, students? PV ratio, BP in terms of units and in terms of value, and sales to achieve a profit of 2 lakh rupees. Look at this. Sales minus variable cost is contribution, minus fixed cost is profit or loss. What is the sales, students? 2000 rupees is the selling price. Variable cost is 1200 rupees. So what is the contribution? It is 800. Let us write it down as a percentage. Sale will always be 100%. How much is variable cost as a percentage of sale? Look at this. If 2000 is my sale, my variable cost is 1200 and my contribution is 800. Yes, 1200 as a percentage of 2000 is going to be 60%. So my variable cost is 60%. Contribution 800 as a percentage of 2000 is going to be 40%. Look at this. How simple it is. How do we arrive at PV ratio? Yes, 800 as a percentage of 2000. 800 divided by 2000 into 100. You want the formula? Contribution divided by sale into 100. You got the PV ratio. Yes, if you want, you can write PV ratio is contribution divided by sale into 100. It is going to be 800 divided by 2000 into 100, which is going to be 40%. Next, what else is required? Question is also asking, what is the break-even point? We want break-even point. Yes, what is break-even point, students? How much is the fixed cost? Fixed cost is 8 lakhs in total. Yes, what is the break-even point? It is the point at which profit or loss is zero. Net, I am left with zero profit or loss. But I have to pay my fixed cost of 8 lakh rupees. So how much contribution I should earn, students? How much contribution I should be getting? Tell me, students, in the comment section. I should be getting a contribution of 8 lakh. Now look at this. If I sell 1 unit, I am getting 800 rupees. So to get 8 lakh, how many units should I sell? Yes, if I sell 1 unit, I am getting 800 rupees. Yes, on 1 unit, I am getting 800 rupees. So to get 8 lakh, how many units should I sell, students? It is 8 lakh divided by 800. How much is it, students? It is going to be 1000 units. Yes. Again, if I am selling 1000 units, every watch I am selling it at 2000 rupees. So what will be my sale value, students? It is going to be 20 lakh rupees. Alternatively, I can also tell it this way. Yes, altogether how much I want? 8 lakh. If I am making a sale of 1 rupee, this is sale, this is contribution. My contribution is 0.4. So if I want a contribution of 8 lakh, how much should be my sale? 8 lakh divided by 0.4, 20 lakh rupees. So 20 lakh is my sale value. From that, 60% of my sale is my variable cost. So 12 lakh is my variable cost. 8 lakh is contribution. We have paid fixed cost of 8 lakh, profit or loss is 0. So BP in terms of units. Yes, you can directly write down looking at this. Yes, this is how we have derived the formula. But if you want to write down the formula as well, what we have done? 8 lakh divided by 800. 8 lakh is the fixed cost divided by contribution per unit. So you can write it is fixed cost divided by contribution per unit. It is going to be 8 lakh divided by 800,000 units. And in terms of rupees, if you want BP in terms of rupees, what we have told, fixed cost divided by PV ratio, 8 lakh divided by 40%, it is going to be 20 lakhs. Yes. Now, what is the next requirement of the question, students? What is the sales required to earn a profit of 2 lakh rupees? I want a profit of 2 lakh rupees. That means how much contribution is required, students? If I want net 2 lakh, I have to pay 8 lakh. That means I should have earned a contribution of 10 lakh. If I have earned 10 lakh, I will pay 8 lakh, I will be left with 2 lakh. Now, by selling every unit, I am getting 800 rupees. So, if to get 10 lakh, how many units should I sell, students? I should be selling 1250 units. All in all, I should be selling 1250 units. Yes, every watch I am selling it at 2000 rupees. So, my sale value is 25 lakh. Yes, I am selling 1250 watches. For every watch, variable cost is 1200. It is given here. So, my variable cost is 15 lakh. Contribution is 10. From that, I pay my fixed cost of 8 lakh. I have arrived at my profit of 2 lakh rupees. Is it clear, students? This was the first question. If you want, again, you can write it down. Look at this, what we have done. Yes, we have first calculated desired contribution. It was fixed cost plus profit. Yes or no? Sales to earn desired profit. Yes, fixed cost plus profit, we have arrived at desired contribution. You can divide it by contribution per unit, or else you can directly divide it by the PV ratio, whatever you want. So it is 8 lakh plus 2 lakh, 10 lakh divided by 40% gave you a sale value of 25 lakhs. Is it clear, students? Any doubts? Should we continue? Yes, everyone. Yes, let us move into the next question, students. Yes. Example 2. Yes. Suppose, yes, in every question we are going to bring one by one, different variant. Some data will be there, some data will not be there. It is going to be interesting. Look at this one. Suppose I am a shirt manufacturer. I am selling every shirt at 700 rupees. My variable cost is 420 rupees. So, what is my contribution, students? I am getting 700, I have to pay 420. So, 280 is my contribution. My fixed cost is going to be 1.4 lakh. So, what is required? Firstly, PV ratio is required. BP is required. Next, if my sale is 14 lakh, what is the profit? What is my BP sale? What is my NY sale? Look at this, per unit. 700 is my selling price. 420 is my variable cost. That means 280 is my contribution. Now, in terms of percentage, sale will always be 100%. Now, variable cost is 420 on a sale of 700, which is equal to 60%. So, contribution is automatically 40%. Obviously, the notes below, I am not going to write it. If you want, you can do it by yourselves. You know now how do we calculate contribution. It was contribution divided by sales. Yes or no? Now, what is required? BP sales is required. Yes, what is BP, students? Fixed cost is going to be 1.4 lakh in total. Yes, what is BP? It is the point wherein profit or loss is 0. That means, yes, how much contribution I want, students? I have to pay my complete fixed cost. I have to pay my fixed cost of 1.4 lakh. That means I want a contribution of 1.4 lakh. If I get 1.4 lakh as contribution, I will pay my fixed cost. I will sell, no loss. Is it clear? Now, if I am selling one shirt, I am getting 280. So, how many shirts should I sell to earn a contribution of 1,40,000 rupees? It is 1,40,000 divided by 280. Is it 500 shirts? Yes or no? Yes, I have to be selling 500 shirts. Now, 500 shirts I am selling. Every shirt I am selling it at 700 rupees. Yes, 3.5 lakh will be my sale value. Yes, 500 shirts I am selling. For every shirt, 420 is the variable cost. So, 2.1 lakh will be my variable cost. So, 1.4 lakh will be contribution. I pay my fixed cost of 1.4 lakh, profit or loss is 0. Is it clear? Now, next case. If my sale is 14 lakh, if my total sale is equal to 14 lakh, what is the question asking? How much is BEP sale? How much is MOS sale? Now, if my sale is 14 lakh, how much is variable cost, students? It is 60%, yes or no? So 60% of 14 lakh, it is going to be 8.4 lakh will be my variable cost. So how much will be the contribution? It is 40% of my 14 lakh. It is going to be 5.6% lakh. Now, I have made a sale of 14 lakh. I have paid a variable cost of 8.4 lakh. 5.6 lakh is there with me. How much fixed cost I should pay? I should be paying a fixed cost of 1.4 lakh. So what is my net profit, students? 5.6 minus 1.4 is going to be 4.2 lakhs. Is it clear? Yes, 4.2 lakhs is the profit. But this is not what was asked. Okay, this is one part. But calculate BEP sale and MOS sale. Now, total sale, let us split it as BEP sale and MOS sale. So I will tell how much is BEP, how much is MOS. So let us also calculate BEP and MOS sale ratio also. Everything let us calculate. Now, what is BEP? It is the point where profit or loss is 0. That means my complete profit of 4.2 lakh I would have earned from my MOS sale. Now in BEP, what I am telling, yes, there is no profit, but I have recovered my fixed cost. So whatever is my contribution, fixed cost of 1.4 lakh, for that sufficient contribution I have earned. That means I have earned a contribution of 1,40,000. On every shirt I will get 280. So how many shirts should I sell? I should be selling 500 shirts. If I sell 500 shirts, every shirt I am selling it at 700. What is my BEP sale? It is 3.5 lakh. What is my variable cost at BEP? 500 shirts and 420 for every shirt. It is 2.1. So I have calculated my BEP sale. What is my BEP sale, students? 3,50,000. Now calculation of MOS sale. It is automatic. Look at this. My total sale is 14 lakh. In that first 3.5 lakh is for BEP. That means the next 10.5 lakh is my MOS sale. As simple as that. This is total. In that 3.5 lakh is BEP. That means 10.5 lakh will be my MOS. Or if you don't want to do it this way, there are tens of different ways. Yes, I can tell in MOS my fixed cost is 0 because my fixed cost is already recovered in BEP. So how much contribution I want? 4.2 lakh. Yes, if I sell one shirt, I am getting 280. So to earn 4.2 lakh, how many shirts should I sell? 1,500 shirts should I sell? So 1,500 shirts I am selling. Every shirt I am selling it at 700. So what is my sale value? 10.5 lakh is my sale value. Again, yes, 1,500 shirts I am selling. 420 is the variable cost. 6.3 lakh is my variable cost. Till here, things are clear. Any doubts, students? Yes, amazing. Yes, drop in all your answers in the comment section, students. Comment section should be flooded with answers. Should we move to the next question? Okay, let us move into the next question. Let us try to increase the difficulty a bit by bit. Now, look at this. Selling price is going to be 800 rupees. PV ratio is 30%. Here, variable cost is not given. Directly PV ratio is given. Fixed cost is 2,40,000. Profit required is 48,000. Calculate what is should be the total sale, BEP sale, MOS sale. Yes. Firstly, in any question, basic question, we should write per unit data percentage. Yes, whatever is given, let us write it down. How much is selling price? 800 rupees. Yes, variable cost is given. No. Contribution is given. No. But what is given? PV ratio is 30%. Yes, if PV ratio is 30%, that means my variable cost should be 70%. Because total is 100%. In that, yes, contribution is 30%. That means variable cost should be 70%. Now look at this. My sale is 800 rupees. 800 rupees is my sale. So 70% of that should be my variable cost and 30% should be my contribution. How much is 70%? 8 sevens are 560. 8 threes are 240. We have calculated our variable cost and contribution. Yes, it is 560 and 240. What is my fixed cost? It is 2.4 lakh in total. Now, what is the question telling? I want a profit of 48,000 rupees. So, in total, I want a profit of 48,000. So, what all is required, students? Look at this. Total sales is required. It's bifurcation between BEP sales and MOS sales is required. So total BEP MOS. Look at this. I want a profit of 48,000. Yes, before I get my profit, I have to pay my fixed cost of 2.4 lakh. That means I want a contribution of 2.88 lakh, 2,88,000. Now altogether I want 2,88,000. Yes or no? Yes. On every unit, how much I am getting, students? 240 I am getting. So how many units should I sell? 1,200 units I should sell. Yes. Every unit at what price I am selling? 800 rupees I am selling. So what will be my sale value? 9.6 lakh. What is my variable cost? 1,200 units I am selling. For every unit it is 560. So it is 6.72 lakh. Yes or no? Isn't this very simple? Yes. So we have arrived at our profit. Now we have to calculate BEP and MOS. Let me calculate BEP. At BEP my profit is 0, but I have my fixed cost of 2.4 lakh, so that I should absorb. So I want a contribution of 2.4 lakh. Every unit I will be getting 240. So to earn 2,40,000, how many units should I sell, students? 1,000 units I should sell. 1,000 units. Every unit I am selling it at 800 rupees. What will be my sale value? 8 lakh will be my sale value. 1,000 units. 560 is the variable cost. 5.6 lakh will be the variable cost. Now margin of safety. Total I have sold 1,200 units. In that 1,000 were for BEP. That means 200 is my MOS. Yes or no? In terms of sale value, total 9.6 lakh. 8 lakh is my BEP. That means my 1.6 lakh will be my MOS. Is it clear? Any doubts? Should we proceed to the next question? We have 3 more interesting questions coming up, students. Yes. Now look at this. This question is slightly interesting. Look at this. Variable cost is 560 rupees. PV ratio is 30%. Fixed cost is 2,40,000. Calculate BEP and calculate the profit if sales is 9,60,000. These type of questions are the questions wherein students at Inter keep struggling. Why they keep struggling? Because they are not in a position to write down all the data and see which all data is available and how they can proceed. See how simple this question becomes. Now you will say, this simple. Chumma, yes, you are telling it was a difficult question. But in CA Inter, most of you guys would have told this is a very difficult question. Look at this. Look at what all data is available. Variable cost is 560 per unit. Yes, 560 per unit. Okay. Now what is question telling? PV ratio is 30%. Yes, if PV ratio is 30%, that means my variable cost should be 70%. That means my sale is going to be 100%. Yes, my fixed cost is going to be 2.4 lakh. Now, how do I calculate? Look at this, students. The only data available here is this. Yes, variable cost is 560, which is 70% of my sale. Look at this. If I am telling, yes, total variable cost in terms of rupees, variable cost in terms of decimals. Yes, variable cost is 560, which is 70% of my sale, 0.7 of my sale. That means, yes, what is the total sale value? It is going to be 560 divided by 0.7. 560 divided by 0.7, 800 rupees. Yes or no? If my sale is 800, out of that 70%, 800 into 70%, 560 is my variable cost. That means 240 is my contribution. If we have done this, now the question is the same as the one we have solved previously. Yes or no? 2,40,000 fixed cost. Calculate BEP. You can calculate BEP. Profit if the sale is 9,60,000. Once you have the data, yes, the main thing is getting the data, looking at what data is required. Now you can solve whatever you want. BEP, profit, everything could be solved. Okay. Yes, the balance of this question, try it by yourself, students. Yes, BEP if you want. Okay, let me do it myself. BEP 0 profit, so 2.4 lakh fixed cost, that means 2.4 lakh contribution, 240 per unit, that means I guess it should be 1000 units. 1000 units at the rate 800, 8 lakh should be the sale value. If I want a profit, if sale is equal to 9.6 lakh, my sale is 9.6 lakh, 70% of that is my variable cost, 6,72,000 is my variable cost. So what is my contribution? 30% is my contribution, 2.88 lakh is my contribution. I have my fixed cost of 2.4 lakh. That means my profit is going to be 48,000. As simple as that. Is it clear, students? Should we move to the next question? We are moving into our next question. Yes, suppose there is a fan manufacturing company. Okay, it is manufacturing and selling fans. On every fan, we are getting a contribution of 140 rupees. Now, what is variable cost? 80%. Fixed cost is 2,10,000. Profit required is 15,75,000. What is required? BEP MOS total sales. Now, once you know how to write down the data, everything becomes simple. Yes, how much contribution? See what all is available. Contribution is 140. How much is variable cost? 80%. If variable cost is 80%, that means contribution is 20% because total is 100%. How much is fixed cost? Fixed cost is going to be 2.1 lakh in total. What is the question telling? How much profit we have earned in totality? We have earned a profit of 15,75,000 in totality. Now look at this, students. Yes, 140 is my contribution, which is 20% of my sale. So what is 100%? Look at this. 140 is my contribution, which is 20% of sale. So what is 100%? Yes, 140 divided by 0.2 or 140 into 100 divided by 20. How much is it, students? 700 will be my sale value. So if my sale value is 700, 80%, 560 is my variable cost and 140 is my contribution. Things are clear till here. Now on totality, I have earned a profit of 15,75,000. Now before I earn my profit, I have to pay my fixed cost of 2,10,000. So what will be the total contribution, students? 15,75,000 plus 2,10,000 will be 17,85,000. Now on every unit, I am earning 140. So how many units should I sell? 12,750 units I should be selling. Now 12,750 units. Every unit I am selling it at 700 rupee. So my total sale is 89,25,000 rupees. And variable cost 12,750 into 560. You can write the variable cost. So part 1 is over. Total sale. Now BEP and MOS is required. Yes, at BEP profit or loss is 0. So my fixed cost is 2.1 lakh. So my contribution should be 2.1 lakh. On every unit I am getting 140 rupees. So how many units should I sell? 1,500 units I will be selling. Every unit is sold at 700 rupees. So sale will be 10.5 lakh. So altogether the sale is 89,25,000. In that BEP is 10.5 lakh. So what is my margin of safety? 78,75,000. Is it clear, students? We are not using any formula, just pure logic. Is it clear? Yes, you can fill the balance table. You can write down the steps if you want. Yes. Now, next question. This is slightly different. Yes, we are a fan manufacturing company. Okay, what is the question telling? I have earned a contribution of 140. My variable cost is 80%. My profit is 15,75,000 and my margin of safety is 60%. Calculate BEP, MOS and total sale. Yes, again believe me. Yes, once I solve, you will tell, was it this simple? Yes. Firstly, let us write down the data. First think of it, how the answer should come. Recorded students can pause and write it down. Yes, now per unit contribution is available. How much is it? 140. Now in terms of percentage, variable cost 80%. That means my contribution 20%. Yes. Based on this, I can calculate my selling price. Yes or no, students? Yes, 140 is my contribution, which is 20% of sales. So 140 divided by 20%, 700 will be my selling price, 560 will be my variable cost. Till now, there was no issue. But now look at this. What is the question telling? How much profit I have earned in totality? Yes, in totality, I have earned a profit of 15,75,000. If I have my fixed cost, okay, I will add fixed cost, arrive at contribution, finish it off. But that is not available. The only data which is available is that it is telling my margin of safety is 60%. What does it mean? Margin of safety is 60% of my total sale. If my total sale is 100%, yes, in that BEP is 40%. That means my margin of safety is 60%. Now, we know one thing. In BEP, we will not be earning any profit. That means the complete profit we would have earned in our margin of safety. Yes, correct. Now, we know that our complete fixed cost is absorbed in BEP. So in margin of safety, there is no additional fixed cost. So how much contribution I want in my margin of safety? 15,75,000 is sufficient because I've already paid my fixed cost. How much contribution I want, students? 15,75,000. Per unit, what is the contribution I'm getting? 140 rupees. So to earn 15,75,000, how many units should I sell? I should be selling 11,250 units. Yes, 11,250 units at the rate 778.75 lakhs, and you can calculate the variable cost as well. Now look at this, students. What I want my BEP sale value, I want my total sale value. How do I do it? Simple observation. What am I telling? Yes, what is my margin of safety? I am selling 11,250 units. You can do it in terms of units or rupees. Yes, when I am selling 11,250 units, that is my margin of safety. How much percentage it is? It is 60% of my total sale. So what is my total sale? Yes, 60% of my total sale is 11,250 units. So what is 100%? Yes, 11,250 into 100 divided by 60, or 11,250 divided by 0.6. It is going to be 18,750 units. So if I sell 18,750 units, that is the total sale I have made. Yes, out of 18,750, 60%, that is 11,250 was my margin of safety. 18,750 into 40%, 7,500 was my break even. Yes. Now you can calculate 18,750 into 700 total sale value. 7,500 units is the BEP into 700. You will arrive at the BEP sale value. As simple as that. Is it clear, students? Yes, 5 students have given the answer. Amazing. Should we continue? Yes, we have one more small concept. Yes, we are discussing concept 1, basics. So in that, first basics of decision making we have told. Next, A was basics of decision making, B was the basic formulas. In that, one more small formula is pending. So let us try to understand this one. Yes. Differential formulas. What is this differential formulas? Assume you are a pen manufacturer. Okay, let us make the example simple. Assume you are a pen manufacturer. Every pen you are selling it at 10 rupees. The variable cost to buy is 6 rupees. Fixed cost is 50,000 rupees. Now, if you are selling 50,000 pens, what is the profit you earn? If you are selling 1 lakh pens, what is the profit you earn? Based on that, let us try to get some observation, some interesting observation. Yes, per unit 10 rupees, 6 rupees, 4 rupees. If I am selling 50,000 pen at the rate 10 rupees, 5 lakh will be my sale value. 50,000 pen at the rate 6 rupees, 3 lakh will be my variable cost. Yes, so 2 lakh will be my contribution. My fixed cost is 50,000. That means my profit is 1.5 lakh. Yes, again, this is the profit. Again, total cost should also be there. Yes, it will be there in the next page. I'm doing it here only for simplicity. Now, if I'm selling 1 lakh units, every pen I'm selling it at 10 rupees. So 10 lakh will be my sale. Variable cost at the rate 6 rupees. 6 lakh will be my variable cost. Contribution is going to be 4 lakh rupees. 50,000 will be my fixed cost. So my profit is going to be 3,50,000. So what is my total cost? When I'm selling 50,000 units, I'm paying a variable cost of 3 lakh and a fixed cost of 50,000. So my total cost is 3.5 lakh. Yes, when I'm selling 1 lakh units, 6 lakh plus 50,000 is going to be 6.5 lakh. Now look at the difference and let us have a look at a beautiful observation. Yes. Now from 5 lakh, my sale has increased to 10 lakh. How much is the extra sale I've made? I've made an extra sale of 5 lakh. How much is the extra variable cost? From 3 lakh, it went up to 6 lakh. 3 lakh is the extra variable cost. How much is the extra contribution that I've got? 2 lakh is the extra contribution. How much is the extra fixed cost? Additional differential fixed cost, it is 0. How much is the extra profit I've got? From 1.5 lakh, it has increased to 3.5 lakh. That means 2 lakh is the additional profit. How much is the extra total cost I've got? 3.5 lakh to 6.5 lakh. 3 lakh is the additional or the change in total cost. Now what is the observation, students? Two important observation. Look at this. Change in contribution is equal to the change in profit, and change in your variable cost is equal to the change in total cost. Why is it? Because your fixed cost is not moving. Yes or no? Look at this. Yes, when I was selling 50,000 units, I had a contribution of 2 lakh. From that I paid 50,000. 1.5 lakh was the profit. Now, when I'm jumping to 1 lakh units, I'm getting 2 lakh extra contribution. There is no extra fixed cost. So obviously my profit will also increase by 2 lakh. Now, variable cost. Yes, at 50,000 units, my total cost was 3,50,000. Yes, my fixed cost is remaining the same. So what is increasing? The only increasing cost is my variable cost. So change in variable cost obviously is my change in the total cost. So let us write down the observations. First one is change in contribution is equal to the change in profit. And next, the change in variable cost is equal to the change in total cost. Now, based on this, what we are going to do? Yes, look at this, students. We have the differential formulas. Now, variable cost ratio. What is variable cost ratio formula? It is variable cost as a percentage of sales. So I will tell it is variable cost divided by sale into 100. What is PV ratio? It is contribution divided by sale into 100. Now, if two different levels of output is given, look at this, students. In this case, let me look at my variable cost in terms of percentage. How much is my variable cost? 6 rupee on a sale of 10 rupees. 60%. Contribution is 40%. Now, when two different level of output is given, can I tell my variable cost ratio is nothing but my change in variable cost divided by change in sale? Yes or no? From 3 lakh, my variable cost increased to 6 lakh. That is, my variable cost increased by 3 lakh. At the same time, my sale increased from 5 lakh to 10 lakh. That is, my sale increased by 5 lakh. Look at this. What is the change? My variable cost changed by 3 lakh. My sale changed by 5 lakh. That means my variable cost ratio is 60%. We've got the same variable cost ratio. And we've already seen, we've already written the observation. Change in variable cost is the change in total cost because there is no change in fixed cost. So can I write it is nothing but the change in total cost divided by change in sale into 100 will give you my variable cost ratio. For a proof, change in total cost from 3.5 lakh to 6.5 lakh. 3 lakh is the change in total cost divided by change in sale 5 lakh into 100 was 60%. Is it clear, students? So look at this. When two different level of output is given, it is equal to change in variable cost divided by change in sale into 100. I know that my change in variable cost is nothing but my change in total cost. So I can tell it is change in total cost divided by change in sale into 100. This is my variable cost ratio. Now, same for PV ratio. Look at my PV ratio. Yes, what was my PV ratio? 40%. So can I tell it is a change in contribution divided by change in sales? Yes, I can tell that contribution jumped from 2 lakh to 4 lakh. That is, contribution increased by 2 lakh when my sale increased by 5 lakh. That means my PV ratio is again 40%. So I can tell my PV ratio is also change in contribution divided by change in sale into 100. Yes, it was change in contribution 2 lakh divided by change in sale of 5 lakh. Again, it was 40%. Now, what I am telling, change in contribution is nothing but the change in profit. Yes or no? So, I can tell it is change in profit divided by change in sale into 100. This will also give you your PV ratio. Is it clear? So, you can write it down for PV ratio as well. So it is change in contribution divided by change in sale into 100. We know that change in contribution is nothing but the change in profit divided by change in sale into 100. So all in all, if we have to write down the formula properly. Yes, when two different levels of output is given, yes, how do we arrive at our variable cost ratio? It is a change in variable cost. Change in variable cost is nothing but the change in total cost divided by change in sale into 100. So all in all, if we have to write down the formula properly, yes, when two different levels of output is given, yes, how do we arrive at our variable cost ratio? It is a change in variable cost. Change in variable cost is nothing but the change in total cost divided by change in change in sales into 100, and PV ratio, it is change in profit divided by change in sale into 100. Is it clear, students? Any doubts? Should we continue? Yes. So based on this, we have one final question. Yes, this is going to be the end of the second concept. Next, we are going into relevant costing technique. Yes, we have a calculator manufacturing company. Let us see what all data is given. Yes, what is the question telling? We have two different years, 2019-20 and 2021. For 2000, yes, for both the years, sale is given, profit is given. What do we do? Yes, otherwise PV ratio, variable cost ratio, contribution, fixed cost, everything would be given. Here, nothing is given. Question is asking calculate PV ratio, BEP, profit when sale is 1,80,000. Everything question is asking. No data is given. Yes, the moment two different level of output is given, the thing that should strike our mind is differential formulas. What is given? Sale and profit. So what is the change in sale? Yes, sale has increased from 1,20,000 to 1,40,000. That means my sale has increased by 20,000. In the meantime, what happened to my profit? It increased from 8,000 to 13,000. That means it jumped by 5,000 rupees. So what is my PV ratio, students? PV ratio is going to be my change in profit divided by change in sale, because change in profit is nothing but my change in contribution. Because my contribution increased by 5,000, my profit also increased by 5,000. So I will tell it is 5,000 divided by 20,000 into 100. It is going to be 25%. Yes, once I've got my PV ratio, now I need to calculate the balance details. Now look at this. My PV ratio is 25%. That means my variable cost ratio is 75%. Now, I want my fixed cost as well. So what I will do is, yes, to calculate break-even point, I will take any one level. I will take, okay, if sale is equal to 1.2 lakh, I will tell if my sale is 1.2 lakhs, yes, variable cost is going to be 75% of that. So 75% of that is going to be 90,000. That means my contribution is 30,000 rupees. Now fixed cost is not given, but profit is given. When my sale is 1,20,000, what is the profit, students? 8,000 is my profit. So look at this. I got my contribution of 30,000, but I paid fixed cost, and net what is there with me is only 8,000. So how much fixed cost I should have paid? I should have paid a fixed cost of 22,000 rupees. So I've calculated my PV ratio. Yes, based on that, I've also calculated the fixed cost. Now other things, whatever is required, we can do. Yes or no? Now we have the basic data. The way you want, you can play with it. Yes, profit when sale is 1.8 lakh. 1.8 lakh you have 75% is variable cost, 25% is contribution, 22,000 is fixed cost. You arrive at your profit. Sales required to earn a profit of 12,000. 12,000 is a profit. 22,000 fixed cost you have to pay. So you get the total contribution. Total contribution, you know, it is 25% of sales. So calculate the total sale. Margin of safety for the year 2020-21. Yes. Total sale is 1,40,000. You can calculate what is the BEP sale. Based on that, arrive at the margin of safety. As simple as that. Balance things is homework for you. Once you've got the data, it is just a matter of substitution. I hope you guys are going to do it. Yes or no, students? With this, yes, we are discussing concept 1 altogether, decision making chapter. We are going to discuss it in 3 concepts. One is the basic concepts, next is various short-term decision, next is other miscellaneous areas. In the first concept, that is the basic concepts, 2 things we have already discussed. One is the basics of decision making, next is the basic formulas. We have discussed contribution, variable cost ratio, PV ratio, break-even point, margin of safety, sales to achieve desired profit or loss, and differential formulas. Not revising it now, already I have revised 4 to 5 times. At the end of the session, we'll revise it again. Tomorrow we'll revise it again, so not revising it again now. Now, yes, just take a deep breath. Just take a small break for a minute. We are going into a new concept, one of the most important concepts, that is relevant costing technique. So just take a small break of 1 minute. We are not going anywhere. Just take a deep breath. Relax for a minute. We will start in a minute. Yes, just have some water. Yes. Yes, let us start with concept 1C, relevant costing technique. Very, very, very important for CA final. Too many attempts, 10 marks questions have been asked in the examination based on this concept. Yes, again, this was not there in CA Inter. So from scratch, slowly, with the help of stories and concepts and logics, we are going to develop it. Believe me, it is going to be very easy. Every concept, we are going to make it easy. Don't worry. Yes. What is relevant cost? Yes. First, let us look at the definition. Then we'll look at the story as well. Yes. What is the relevant cost? It is the cost which is relevant to take any decision. It is relevant to take any decision. That is the cost which is incurred only if I take a specific decision. If I take this decision, the cost will be incurred. If not, the cost will not be incurred. That is the relevant cost for taking a decision. What is the relevant cost, students? Yes, we'll explain it with the help of an example. It is the cost which is incurred only if I take that decision. Otherwise, that cost will not be incurred. Yes. Say for example, yes, I was taking offline classes. Till that time, there was no requirement for internet at my home at all. Now I'm thinking, should I start online classes? If I have to start online classes, yes, what additional cost I have to incur? It is incurred only if I start online class. I should get internet. For that I have to pay 1,000 rupees. That is irrelevant. I should get a webcam. For that I should pay 10,000. That is irrelevant. Yes, I should get probably ring lights. That is also relevant. So it is incurred only if I take the decision. If I take the decision, I incur the cost. If I don't take, I won't incur the cost. Yes. Two conditions are there for a cost to be relevant cost. Any cost will be relevant if two conditions are fulfilled. Firstly, it should be a future cost. It should not be incurred in the past. Second, it should be a differential cost. That is, the cost is different for different alternatives. What is it? We'll explain. Now, we'll begin with our example. All of you guys are ready, students, for our next example, next story? Yes or no? How's the Josh, students? Yes, the notes will be provided on Telegram as well. Don't worry. Yes. Are you guys ready for the next story? Yes, recorded students. Yes. So, yes, our hero. Who is our hero? Mr. Amanda from Uganda. What happened to him? He fell in love. Oh, and he wants to go on a date. He wants to go on a date, yes, with his girlfriend. Now, what we are trying to calculate is we are trying to calculate the relevant cost to go on a date. What is the relevant cost to go on a date? It is the cost which is incurred only if he decides to go on a date. Otherwise, that cost is not incurred. Now, you guys will have to tell me whether the cost is relevant or not. Whether the cost is relevant, irrelevant, you have to tell me, students. Yes, what is the relevant cost? It is incurred only if we take the decision. Otherwise, that is not required. Now, Amanda is thinking, yes, I'm going on a date. First time I'm having a girlfriend. I should look good. So I should buy a shirt if I want to go on a date. So what he is doing, he is buying a new shirt. Why is he buying a new shirt? Specifically to go on a date. Is he having the shirt already? No. He is buying it specifically to go on a date. So whether the 2,000 he is giving, it is because he is going on a date? Yes. So is it a relevant cost, students? Yes, it is a relevant cost. Yes or no? Yes, 2,000 rupees. Is it relevant? Is it irrelevant? Yes, if he decides to go on a date, he has to pay 2,000. If he doesn't want to go on a date, he's saying, I have existing clothes. It is sufficient. I don't want a new shirt. Yes or no? So it is relevant for going on a date. Now, next. Yes. Now, next thing he has is, yes, not just a good shirt. He should look good as well, right? Now, what happened is 1 week before he got a haircut done. Not today. 1 week before he got a haircut done. Yes, for his haircut, he paid 100 rupees. Is that cost relevant for going on a date? Yes, 1 week before, not today. Yes, previously only he has already done his haircut. Yes, is it relevant to go on a date? Is it relevant to go on a date or is it irrelevant, students? Tell me. Yes, everyone in the chats. Is it relevant? Is it irrelevant? Is it relevant or irrelevant? It is not relevant. Why? Because I've already done my haircut. Now, whether I go on a date, I don't go on a date. I've already done my haircut. Whether I take the decision, I don't take the decision. That is already done. Point number one. Point number two, it is already incurred in the past. I'm not going to incur. It is not a future cost. It is not incurred because I am taking the decision. It is already taken in the past. So it is not relevant. So haircut I have got 1 week before, that is not relevant. But now I am thinking, not just a haircut, I need to look good. I should trim my beard, I should get a facial done so that she thinks he's the most handsome guy in the world. Yes or no? That's what every boy wants. So what I'm thinking, I'm going, yes, I'm trimming my beard, I'm getting Amanda is getting a facial done. For that he is paying 500 rupees. Today, because he is going on a date, he is incurring this. Because he is going on a date, he is trimming his beard. Because he is going on a date, he is getting a facial done. Is it relevant? Is it irrelevant? Is it relevant? Is it irrelevant, students? Think and tell me. Yes, it is relevant because it is incurred only because I am going on a date. Otherwise, who would get a facial? Yes or no? I am doing it just because I am going on a date. Okay, just because he is going on a date, so that is a relevant cost. So that 500 is relevant. So shirt I have purchased just because I am going on a date. Yes, facial I have done just because I am going on a date. These two are relevant. Now next, watch. I am going on a date. I should gift her something, right? So to gift her, I am buying a watch of 10,000. He's very rich. Amanda, he is making multi-millionaire. Yes, so he is purchasing a watch just to go on a date. Is it relevant? Is it irrelevant? Would he have purchased the watch otherwise? No, he is purchasing it to gift it to her just because he is going on a date. Just because we are taking that action. So is that relevant, students? Yes, purchasing of watch, that is also relevant. 10,000 is also relevant. Now, yes, car. Yes, Mr. Amanda already had a car. Yes, he already had a racing car. Previously, he had the craze for racing. So he had already purchased the car. So car he has purchased previously, its yearly depreciation is, say for example, 1 lakh rupees. Whether that depreciation is relevant, think and tell me, students. Yes, is he taking it specifically for the decision? Simple. Yes. If I take the decision, I should incur the cost. If I don't, I should not incur the cost. That cost is irrelevant. Now, car, did he purchase to go on a date? No. He already had a car. Yes or no? So, car's cost, car's depreciation, whether he went on a date or he didn't go on a date, that cost he would have incurred. So, it is irrelevant. Is it clear? But fuel cost is incurring. Yes or no? Because he is going on a long ride, long romantic, beautiful ride with good songs. Yes, so he is putting 200 rupees fuel. Yes, so is this 200 rupees fuel relevant? Yes. Why is he putting 200 rupees fuel? Because he is going on a date. Yes, because we are doing this, we should incur. Otherwise, we should not incur. That cost is relevant. Is it clear? So that 200 rupees fuel is going to be relevant. So they went on a very luxurious, yes, posh restaurant. Yes, they are having their food. Now, in this food, what Amanda is thinking, look at this. Yes. He is having a food of 2,000 rupees. Whether complete 2,000 is relevant, think of it. Yes, whether complete 2,000 rupees is relevant. Look at this. Otherwise also he should have had food. Yes or no? Whether he goes on a date, he doesn't go on a date. He should have food. Yes or no? Yes. Normally he will not have such a high-fi food. Normally he would have had a food of 100 rupees. So normally any day, whether he goes on a date, he doesn't go on a date, he will be having food for which he will be paying 100 rupees. Now today, because he is going on a date, he is incurring 2,000 rupees. So what is the relevant cost, students? What is the cost incurred just because I am taking the decision? How much is it, students? Option number 1, 100. Option number 2, 2,000. Option number 3, 1,900. Option number 4, 2,100. How much is relevant? How much is incurred just because I am going on a date? Tell me, students. Yes, how much is incurred just because I am going on a date? 1,900. Yes or no? Otherwise also I would have paid 100 rupees. Now today how much I am paying? 2000. So how much I am incurring just because I am going on a date? This 1900 I am incurring extra just because I am going on a date. So this 1900 is going to be relevant. So now let us have a look at, yes, all the relevant cost. Yes, relevant and irrelevant. New shirt he has purchased specifically to go on a date. It is irrelevant. Haircut he got few days back. It is irrelevant. Trim plus facial he got it specifically to go on a date. 500 rupees relevant. Yes, watch he has purchased specifically to gift it to her on a date. 10,000 relevant. Fuel he has put specifically to go on a date. Relevant. Food bill 100 was irrelevant. Otherwise also he would have incurred. Yes or no? But this 1900 he is incurring specifically to go on a date. What is the total relevant cost? This is the total relevant cost. Is it clear, students? Yes, this is what relevant cost is all about. What we are telling? Yes, we stand here and we think. Yes, if I take the decision, I will incur the cost. Otherwise, I won't incur the cost. That cost is only relevant. All other things are going to be irrelevant. Is it clear? Yes. Now, yes, we'll take the discussion further. Yes, now look at this. It will make complete sense. Yes, what is the relevant cost? It is the cost which is relevant to take any decision. It is incurred only if I take a decision. It is incurred only if I take a decision. Otherwise, that cost is not incurred. Two conditions for a cost to be a relevant cost. Firstly, it should be a future cost. It should be incurred in the future. If it is already incurred in the past, how can it be relevant? Now, whether I take the decision or not, that cost is already incurred. Suppose I got my haircut 1 week back. Yes or no? Yes, whether he goes on a date, doesn't go on a date, that cost is already incurred. If it is already incurred, if it is a past cost, it will never be relevant. It should be a future cost. Point number one. Point number two, it should be a differential cost. It should be a differential cost. That is, cost should be different for different alternatives. Yes, that is, look at this differential cost. If he does not go on a date, still he has to have food of 100 rupees. If he goes, he should have a food of 2000. So complete 2000 is not relevant. Only differential. It is incurred only if the decision is taken. How much extra I am incurring? 1900 rupees. Yes or no? Yes. Say for example, I am telling, yes, Mr. Amanda. Yes. Daily he has a very good habit of giving charity of 5,000 rupees. Irrespective of whether he is going on a date or not. Yes, think of it. Yes, irrespective of whether he is going on a date or not, he has a very good habit because he is a very rich person. Yes, and kind from heart. Every day he gives 5,000 rupees as charity. Now, he goes on a date, he does not go on a date. He goes on a date, that day also he will give 5,000 charity. He does not go on a date, that day also he will give 5,000 charity. So, is it relevant to go on a date? No, this is not relevant. Yes, it is a future cost. Today only I am incurring. I have not incurred it yesterday. Today only I am incurring. But is it relevant to take the decision? No. Otherwise also I would have incurred this cost. What is relevant? Look at this. If I go on a date, I am paying 2,000 rupees for food. If I don't go, I am incurring only 100. So the balance 1,900 is going to be relevant for. Is it clear, students? What is relevant cost? It is the cost which is relevant to take any decision. That is, that cost is incurred only if we take the decision. If we take the decision, we incur. Otherwise, we don't incur. Two conditions, it should be a future cost, it should be a differential cost. Now, let us have a look at few costs and their treatment. Let us see if they are relevant, irrelevant, how much is relevant and all of that. Yes, first type of cost, historic cost or sunk cost or committed cost. What is a historic cost? It is a cost which is already incurred in the past. Yes or no? A cost which is already incurred in the past. Will it affect my future decisions? No, it will not affect my future decisions. Yes or no? Yes, historic cost, sunk cost, committed cost. Yes, I got a haircut 1 week back. Historic. Yes, it is already sunk, it is already done, it is already committed. Yes, it is irrelevant for decision making. Is it relevant? No, it is irrelevant for decision making because it is already incurred in the past. It is irrelevant irrespective of whether it is actually paid or payable. Now, look at this. What is the difference between historic cost, sunk and committed? Historic includes two. One is sunk, one is committed. Yes, Historic means the cost which is incurred in the past. Now sunk, what does sunk mean? Sunk means it is incurred in the past plus payment is also made in the past. Yes, say for example, yes, 1 week back I went for a haircut. Yes, I paid the 100 rupees. It is a sunk cost. Yes, I've incurred also, I've paid also. What is committed? I went there, I got a haircut. Yes, I told, wait, I will give it to you in a week. My UPI is not working. Now what is it? It is committed. It is incurred in the past. Yes, it is historic. Is it paid? Is it sunk? It is already paid? No. But it is committed already. Obviously, I have to pay. Whether I go for a date, I don't go for a date. I have already committed this. Yes, I have not paid, but I have already committed it. I have to pay. So what is this? It is incurred, but not paid. So whether I pay or don't pay, if it is incurred, it is irrelevant. So it is a historic cost. Say for example, car. I've purchased, I've paid the complete amount. It is sunk cost. Yes, I've purchased. Yes, I'm taking loan. Every month I'm paying EMI. So it is committed. Whether I go on a date, I don't go on a date. Every month I need to keep paying my EMI. So it is irrelevant. So historic cost, sunk cost, committed cost. Is it relevant? Is it irrelevant? Tell me, students. What is it? Historic cost, sunk cost, committed cost. It is irrelevant for decision making. Yes. Next one. Yes, for example, yes, we have two examples here. One is research and development cost, one is book value of assets. Say for example, I am making a research that, I want to come up with a pen. Yes, wherein if I just hold like this, it will keep writing. Just imagine. Yes, so that is my crazy idea. Yes, for that I have already done a research. I have already incurred 10 lakh in the past. Now, whether I actually manufacture this pen, I don't manufacture this pen. That 10 lakh is already incurred. So, does it make any sense to include it while I am taking a decision? It is not required at all because it is already incurred. Now, I manufacture pen, I don't manufacture pen. That 10 lakh gone is gone. Yes or no? And book value of asset, book value or written down value of asset. Say, for example, I purchased the car of 10 lakh rupees. Yearly I am charging depreciation. Now, the value is 4 lakh rupees. It's of no use, irrelevant because it is incurred in the past, no use at all. Is it clear, students? Yes. Now, let us have a look at one example here. Historic cost. Yes. So, there is one student. Okay. So, he is deciding, which institute should he go for CA Inter coaching. CA Inter coaching he wants to go. There is one ABC institute. There is one XYZ institute. Yes. Now, he is thinking which institute he should go. Yes. What he will look? He will see how much is the fees here as against that how much is the fees here. Here it is 45,000. Here it is 50,000. Yes. This cost is relevant. Yes or no? Yes. But what is irrelevant? Yes. The foundation fees. Yes or no? Yes. He had gone for a different coaching center for CA foundation. There he paid 30,000 rupees. Is it relevant while I am taking a decision? Should I go to XYZ institute or ABC institute? It is already done in the past. I have already paid. Yes, now whether I go to XYZ institute, there I have already paid 30,000. Now whether I go to ABC institute, there I have already paid 30,000. So it is completely irrelevant for my decision making. Yes, what is the decision making I am doing? Should I go to ABC institute or XYZ institute? Other example, same thing, I have two coaching institutes. Yes. Now CA Inter registration fees 20,000 I have to pay. Now whether I go to ABC institute, I have to pay 20,000. Whether I go to XYZ institute, I have to pay 20,000. Is it relevant to take a decision whether should I go to ABC or XYZ? No, it is not relevant. Is it clear, students? Any doubts? Should we continue? Perfect, amazing, students. Now, let us proceed further. Yes, next one. Fixed cost or fixed overheads. Yes, again, believe me, everything you will only tell. I am just creating an atmosphere wherein you will tell me the answers. Yes, fixed overhead could be allocated overheads or additional overheads. Now, let us again try to understand it with the help of an example. Yes, suppose, we had a stationery shop. Yes, stationery shop, the rent we used to pay was 10,000 rupees per month. So what happened was, here I had a small space. Yes. So what I did, I thought, why not I start a vegetable shop in this place? Yes, so I had already some space. So I'm thinking, why not let me start a vegetable shop. So what I've done in the same place, yes, I've started my vegetable shop as well. Now, yes, for accounting purpose, what we do, yes, while we are costing, yes, while we are doing costing, yes, what we do, this 10,000, we are splitting it between stationery and fresh produce. I'm telling, yes, 5,000 rupees is the allocated fixed cost for stationery, 5,000 is the allocated fixed cost for grocery items or vegetables, whatever it is. But I'm asking from the perspective of decision making. Yes, what am I doing? I'm thinking, should I take a decision? What is the decision? Should I start vegetable shop or not? Now, my rent, if I start a vegetable shop, my total rent will be 10,000. If I don't start, still my total rent is 10,000. Yes or no? So, is this cost relevant for decision making? No. If I take the decision, I don't take the decision, the cost will be same. So, is it relevant for decision making, students? No. Okay, internally I will transfer 5,000, I will allocate all these things I will do, but yes, it is not relevant to take the decision. Is it clear, students? Now, if we have to take a decision of whether to start a grocery shop or not, yes, we will tell, yes, fix rent anyways. Now also we are paying 10,000, in future also 10,000, nothing extra we are paying. Yes, so in terms of fixed overheads, there is allocated overhead or the existing overhead, it will be irrelevant for decision making. But second case I am telling, say for example, yes, this is how the place was there. So in the existing place, completely I had my stationery. So for this place, I was paying 10,000 rupees. Now I'm thinking whether to start a stationery business. So if I have to, whether to start vegetable shop. So if I have to start my vegetable shop, I want some extra place. Some extra place, I need to get it on rent separately. So I ask the landlord, how much is it? He is telling, yes, for two shops together, you pay me 13,000 rupees. Now, is this relevant, students? How much is relevant? Yes, whether I start grocery or I don't start grocery, I have to pay 10,000. But if I start grocery, I have to pay total of 13,000. So, how much is relevant, students? How much extra I am incurring because I am starting a grocery? 3,000 is the amount which I am incurring extra because I am starting a stationery shop. So what is the relevant cost? This is the additional fixed cost I am incurring because I am taking the decision. So this cost is going to be relevant for me. Is it clear, students? Okay. So look at this. Fixed overheads could be allocated overheads. Fixed overheads or fixed cost could be allocated overheads, additional overheads. What is allocated overheads? Just the existing overhead we are distributing for costing purpose, for accounting purpose. But from a decision making perspective, is it relevant? No. Yes, whether I start a grocery, I don't start a grocery, 10,000 rent I had to pay. So it is irrelevant. Yes, but the additional overheads, if I was having only stationery, the rent was 10,000. But if I start a grocery, I have to pay 13,000. How much extra I am incurring? How much additional I am incurring? 3,000. That additional overheads is going to be relevant for our decision making. Is it clear, students? So look at this. We have allocated overheads and we have the additional overheads. Allocated overheads, additional overheads. Different names could be possible. Allocated overheads, absorbed overheads, recovered overheads, common overheads, all means one and the same thing. It is just the existing overheads. We are just distributing for accounting purpose. Yes, from a decision making perspective, is it relevant, students? Existing overheads, unavoidable, yes or no? Whether I start grocery or not, this 10,000 will be there. It is unavoidable. Yes, this additional overhead is avoidable, incremental. Yes, it is irrelevant for decision making. But the additional overheads which I am going to incur, yes, additional overheads, specific overheads, specifically for, yes, taking a decisions. This 3,000 I am incurring specifically because I am starting a grocery. This is traceable specifically for starting my grocery business. It is avoidable. If I don't start grocery, this 3,000 could be avoided. Incremental, this I am incurring extra. This is relevant for decision making. All these different names could be there. Yes, whatever the name is, if it is existing allocated overheads, it is irrelevant. Yes, if it is additional overheads, it is relevant. Is it clear, students? Yes. So till now, what all we have discussed, let us quickly try to revise. Yes, we are discussing concept 1C, relevant costing technique. What are we telling in the relevant costing technique? Yes, while we take a decision, we should consider only the relevant cost of taking the decision. That is, that cost is incurred only if we take the decision. Otherwise, that cost will not be incurred. Yes, if we take the decision, that cost is incurred. Otherwise, that cost is not incurred. That cost is irrelevant cost. Two conditions. Firstly, the cost should be a future cost, should be incurred in the future. Secondly, it should be a differential cost. That is, it is incurred only if we take the decision. Otherwise, that cost is not incurred. That is a relevant cost. Yes, one by one items we are discussing. First item that we had discussed, which was that, I guess, yeah, it was historic cost, sunk cost, or committed cost. It is a cost which have already incurred in the past. It is already incurred in the past, so it is not relevant for decision making. Next, I am telling fixed overheads or fixed cost. I will tell, the moment I tell fixed cost, I won't tell it is irrelevant. You'll ask, what is it? Is it existing or allocated overheads, or is it additional overheads? If it is allocated, yes, it is irrelevant. But if it is additional, I am incurring only because I am taking the decision, it is going to be relevant for me. Is it clear, students? Yes. Next item is going to be opportunity cost. So let us try to understand opportunity cost. So this is me. I have qualified as a chartered accountant. Yes, now I am thinking what all options are there with me. Either I can go into teaching, or I can get into practice, or I can join for Big Four, or I can join the industry. Now, how much I am getting? If I start teaching, assume I am getting 10 lakh rupees per annum. If I get into practice, assume I am getting 9 lakh rupees per annum. If I am joining Big Four, assume I am getting 11 lakh. And if I am joining industry, assume I am getting 15 lakh rupees. Yes, all these options are there. Yes, opportunity cost. Suppose I am telling, yes, I want to start with teaching. Yes, what I am sacrificing? Yes, what I am sacrificing? What is the thing that will keep hurting me the most? I'll keep telling, I won't talk about practice because I'm getting more than that. Yes, I won't even talk about Big Four. Yes, some pain would be there, but what is the thing that will haunt me the most? In industry, I was getting 15 lakh. I left that and came into teaching. Yes, what is my opportunity cost? What is the maximum amount I'm sacrificing to get into teaching? 15 lakh is my opportunity cost. Suppose I tell I want to start practice. What is the maximum amount which I could have got, which I have avoided because I want to start my practice? Yes, from practice perspective also I'm telling. Yes, if I would have joined industry now, I would have got 15 lakh. I have left that and come here. Yes, if I get into Big Four, what is my opportunity cost? I'm telling, yes, if I would have not chosen Big Four, I would have got into industry wherein I could have got 15 lakh. This I'm sacrificing. And in industry, if I get into industry, what I'm sacrificing? I'm telling, yes, if I would have not gotten into industry, how much I should have, how much I would have got? I would have got at least 11 lakh. Yes or no? That is my opportunity cost. So when we take a decision, a bare minimum of our opportunity cost we should get. I mean, from a purely financial perspective, for decision making, from a purely financial perspective, which decision is the best? Going into industry is the best. Why? Because, see, anywhere else I would have gone, yes, maximum how much I would have got? 11 lakh. But here I am getting 15 lakh. So how much extra I am getting? 4 lakh extra I am getting. Big Four, if you join, 11 lakh. But I have sacrificed 15 lakh. So I am not getting sufficient. Yes or no? Yes, this is what is opportunity cost. Now, not going there. Yes, look at this. What is opportunity cost, students? Wait a minute. Yes, what is opportunity cost? It is the maximum contribution foregone. Maximum contribution foregone. Maximum how much you have sacrificed by rejecting other alternatives. It is just a notional cost. In reality, you are not paying 11 lakh. Yes or no? In reality, you are not paying 15 lakh. But it is just a notional cost. It does not involve cash payment. But is it relevant for decision making? Yes, it is relevant for all business decisions. Yes or no? Look at the example I had told previously. I can either get into shirt manufacturing or jeans manufacturing. Yes, if I at present I am manufacturing shirts. By manufacturing shirts, how much contribution I'm getting? 600 contribution I'm getting. So if I'm selling jeans, yes, 600 contribution I should get bare minimum. Yes or no? Because if I take a decision to manufacture jeans, what is happening? I am losing this contribution. Yes, if I was manufacturing shirts, I was getting this contribution. But if I take a decision that I will manufacture jeans, what is happening? I am losing this contribution. So bare minimum, this at least I should earn. So if my variable cost of manufacturing jeans is 1300, yes, and the customer tells, yes, your variable cost is 1300, right? I will give you 300 extra, give it to me at 1600. Will you accept? If you accept, your mom will give you a bit tight slap. Telling to earn 300 rupees contribution, you have started this. Yes, you are getting a contribution of 600. So if you start jeans, at least 600 contribution you should get. Yes or no? So bare minimum of 1900 we should get. Even if we get 1900, are we happy? No. Because 600 contribution previously only I was getting. If I get 2000, oh, then okay, I have got 100 rupees extra. So what I am telling is this opportunity cost which I have sacrificed to take this decision, this is also relevant. This also I should recover. This also bare minimum I should get. Because I am sacrificing this, this also bare minimum I should be getting. Is it clear, students? Opportunity cost. What is opportunity cost? It is the maximum contribution forward, maximum how much I have sacrificed. Yes, it is just notional. In reality, I am not paying them, but it is just notional. It is also relevant for decision making. Is it clear, students? Any doubts till now? Yes. Next, finally, we have out of pocket cost or additional cost. What is out of pocket or additional cost? It is the additional cost incurred for taking a specific business decision. It is also relevant for decision making. Suppose I am telling, yes, at present I am manufacturing shirts. Okay, now to manufacture jeans, what all I have to do is, obviously 1300 rupees variable cost I need to incur. But additionally, out of my pocket, what I need to do is, say for example, I need to deliver the goods to the customer, for which I am incurring 50 rupees. So that also should I recover? Yes. Is that also relevant? Yes. Because if I manufacture jeans, only then I incur that 50 rupees. If I manufacture jeans, only then I incur that out of pocket cost, additional cost. Otherwise, I don't incur that. So that cost is also going to be relevant for decision making. Is it clear, students? Yes, just to summarize whatever we have told till now, look at this. What is relevant cost? Relevant cost, it is the cost which is incurred only if we take the decision. So no, that is, if we take the decision, we incur the cost. We don't take the decision, we don't incur the cost. Such a cost is relevant. Two conditions for a cost to be relevant cost. It should be future cost, that is, it should be incurred in the future, and it should be incremental cost, it should be the extra cost. Now, four items we have discussed here in relevant cost. Yes, first is historic cost, sunk cost, committed cost. Is it relevant or irrelevant? It was irrelevant for decision making, already committed in the past. Now, fixed cost, we are telling what kind of fixed cost it is, fixed overhead it is. Is it allocated, absorbed, recovered, or is it additional, incremental? Yes, if it is allocated, we tell it is irrelevant. Irrespective if we take a decision or not, it will be incurred. Additional is relevant for decision making. Opportunity cost. Yes, it is what we are sacrificing because we are taking the decision. Obviously, it will be relevant. And the next one that we have is going to be our next one was out of pocket or additional cost. This is also going to be relevant. Is it clear, students? Any doubts till now? Yes, I had planned to take one more small point. Should we take that and wind up the session, or should we stop it now itself? You guys tell me. You guys decide and tell me. Yes, it might take 10 minutes. Should we do it and wind up the session, or should we wind up the session now? Should we continue it now? Okay. Okay. Maximum of 10 minutes it will take. Okay, let us do that. Yes, okay. Next concept we are going to discuss in relevant costing only. We are going to discuss the relevant cost for material, labor, overheads and machines. This is going to be the next concept. Look at the students. The relevant cost for material, labor, overheads and machines. With this, the concept will be completely over. Today we'll be finishing off material, labor, overheads and machine. Tomorrow we'll be finishing. Tomorrow we'll be finishing all the 7 questions which is there in the study material as well as the additional question booklet. All the questions will be finishing it off tomorrow. That's our target for tomorrow. So let us begin with material. Yes, again, let us try to understand it with the help of stories, because we understand it better with the help of stories. So, what is the story? So I have started my teaching with CA Inter. So I have initially started my CA Inter classes. Now I am thinking whether to start CA final classes. Now to give pen drive classes, what all I want? Obviously content I want. In addition to that, to give pen drive classes, I want the pen drives. Again, I want the printed copy of the books. Yes. Now I have my employees, 2 employees. Now I'm telling, yes, I'm already taking classes for CA Inter. Now I'm thinking, should I take classes for CA final as well? So what I want to calculate what is the relevant cost of taking classes for CA final. That is, I will incur it only if I take classes for CA final. Otherwise, I won't incur it. Suppose I have taken this place on rent. I'm paying 30,000. I take for CA Inter, I take for CA final. I don't take classes. Still, I'm paying 30,000. Is it relevant? No, it is not relevant. Now, let us go into material first. Yes, all these items I have. Now, yes, I am thinking I will record the classes. Now, material cost. Yes, first case. Yes, for students, I am considering the case of pen drive. Pen drive is a material which I have to give it to students. Classes will be recorded on pen drive and students can take it from there. Now, 2 different cases could be there. Point number 1, yes, I am not having pen drive in the stock. Point number 2, I am having pen drive in my stock. Now, look at this. Yes, so I am asking whether do we have any pen drive in our stock. The employee is telling no, there are no pen drives at all, sir. Now, so what I'll have to do if I don't have pen drive, if I start my CA final classes, what I need to do, students, tell me. Yes, if I start my CA final classes, I need to give classes on pen drive. I'm not having pen drive at present. So what I need to do, I need to purchase a pen drive. Suppose to purchase a pen drive, I have to pay 800 rupees. So is it relevant, students? Yes, that 800 rupees is going to be relevant for me. Why? Because I will incur it only if I start my CA final classes. Otherwise, that is not relevant. Yes or no? If I am not taking CA final classes, there is no need for me to purchase pen drive. But because I am taking CA final classes, because I have to give it on pen drive, I have to purchase a pen drive. So the purchase price I am going to give is going to be relevant. Is it clear, students? Any doubts? Yes. Now, so look at this material. Either material would be in stock or material would not be in stock. If material is not there in stock, what we need to do, students? We need to purchase the material. So what is going to happen? Relevant cost is going to be the purchase cost of raw material. Is it clear? Yes. I am not having pen drive in stock. So if I start CA final classes, I should purchase pen drive for which I should pay 800 rupees. So 800 is irrelevant. Is it clear? Now, option number 2. Yes. Option number 2, second scenario, I am telling, yes, I am asking my employees, yes, do you have pen drive in stock? Yes, he is telling, yes, pen drive is there in stock. Yes, I am asking, are you currently using it for CA Inter or is it lying free? So he is telling, sir, at present we are using it for CA Inter. What I tell, okay, you have it for CA Inter, right? You have pen drive with you. Let's do one thing. Yes, today, yes, there is an urgent requirement to give it for my CA final student. So do one thing, give that pen drive to me now. Yes, tomorrow you buy a new pen drive for your CA Inter students. Is it clear? So what I am telling, yes, for final it is urgent now. So I will take that pen drive. For CA Inter, you buy it tomorrow. Yes, so if it is there in stock and the item is regularly used, what I need to do, I need to replace that item. So the replacement cost is going to be relevant. Replacement cost is nothing but my purchase cost. Yes, we'll explain further. For now, just write it as replacement cost. Again, explanation is going to come. What is my relevant cost, students? Relevant cost is going to be my replacement cost. Replacement cost, purchase cost generally will be one and the same. Now look at this. Yes. I have already purchased the pen drive. Okay. Now what I am telling, two decisions. I start CA final. I don't start CA final. Yes. Now the pen drive is already there in stock. It was meant for CA inter. Now what I am telling, yes. Now give it to me for CA final. Okay. Tomorrow I will purchase a new pen drive for CA inter. So what I am doing, yes. Now I am using it for CA final, but tomorrow I will have to buy a new pen drive for CA inter. So tomorrow I have to pay 800 rupees. Why am I incurring this 800 rupees? Because I have started CA final, because I am using that pen drive, I am incurring this 800 rupees. If I had not started CA final, that pen drive was there, that pen drive itself I would have used for CA inter. Now because I have taken that pen drive, I need to purchase a new pen drive for CA inter. I need to replace that item, I need to replace that material. So whatever is the amount I am incurring to replace that material, that will be relevant. Is it clear? Yes, item is in stock, but it is regularly used. So what I need to do, I need to replace that item. I need to replace that item. So whatever is the amount I'm incurring to replace that item will be relevant for me. Is it clear, students? Yes. So if item is in stock and it is regularly used, I need to replace the item. So the replacement cost will be relevant. Is it clear? Yes. Now, if the item is in stock and it is not regularly used, now what is going to happen? Look at this. This is going to be the last item, students. Yes, case 3. Yes. I asked my employee, yes, whether do you have pen drive? He is telling yes. I'm asking, yes, but he is telling, sir, we have so many pen drive with us, but there is no use. CA inter students are only going for Google Drive lectures. They are not purchasing pen drives at all. We have some 10 pen drives left. Yes, which is not moving at all, which is of no use. We have it in stock, but which is of no use. So I'm asking, what were you thinking of doing with those pen drives? He is telling, what I was thinking is, we should sell it off as a scrap. Yes, if I sell it off as a scrap, yes, I will be in a position to realize 300 rupees. Yes, I purchased it for 700, but I forgot it. It is already done in the past. Now what I am thinking, because it was of no use, let me sell it off as a scrap and I would get 300 rupees as my NRV, realizable value. I tell, don't sell it. It is required for CA final. Yes. So what is the relevant cost, students? Yes, it is 200 rupees per piece or 300, whatever is the amount. So I'm telling, don't sell, just keep it in stock. This one we will recover from CA final. So what is the relevant cost, students, in this case? Yes, if raw material is there but it is not regularly used. Look at this. Raw material is in stock but it is not regularly used. Yes, if I start CA final class, if I don't start CA final class, yes, if I don't start CA final class, what I would have done, yes, I would have sold it as a scrap and I would have got a realizable value of 200 rupees. Now because I am using it for CA final, I am not in a position to sell it off as scrap and realize that 200. So I am telling, bare minimum I should be getting the realizable value of 200 rupees. Is it clear, students? So look at this. Yes, not regularly used. What is the relevant cost? It is going to be the realizable value. Yes, almost over. It is only a matter of 2 to 3 minutes. So let us quickly summarize whatever we have told everyone, students. Energy. Yes, what we are telling, we are calculating the relevant cost for material. That is the cost which is incurred only if we take a decision. Yes, firstly we see whether the raw material is in stock or it is not in stock. Raw material is not in stock. If it is not in stock, if we take a decision, we have to purchase the raw material. So the purchase cost will be relevant. Raw material is already in stock, but it is regularly used. So if I use it here, I will have to replace it for the existing product. So what is relevant? The replacement cost, the amount I am incurring to replace the product will be relevant. Next, raw material is in stock, but it was not regularly used. It is of no use at all. What we were thinking? We were thinking to dispose it off as scrap. So what is relevant? The realizable value is going to be relevant. Is it clear, students? Any doubts? Yes. Now, Now, relevant cost of raw material which is not regularly used and in stock is going to be realizable value or benefit from alternate use, whichever is higher. What is this? Again, let us try to understand. Same thing I'm telling. Yes, I have pen drives with me. Yes, I called my employee. I asked whether do you have pen drives. He's telling yes, I have it in stock. I'm asking, are you using it for CA interview? He's telling no. Then I'm asking, what were you planning? He's telling, sir, two options are there. Yes. So what were the two options you were thinking in your mind? Either one, I can sell it off as scrap. If I sell it off as scrap, how much I would have got? 200 rupees. Again, one more proposal is there, sir. What is the proposal I asking? Sir, there is a company which is selling movies for students. Okay, nice movies it is selling. So he wants a pen drive in which he will load all the movies. Yes. So what we should do? Yes. He is telling you give me the pen drives. Okay, I will insert all the movies. I will be selling the movies at 700 rupees. We will share the profit 50-50. So what he is telling is I will give my pen drive. He will sell the movie at 700, 50-50. Yes, that is how much I will get. Yes, benefit from alternate use. How much I would have got? I would have got 350. Then, if I had not started CA final, what I would have done? Would I have sold it as a scrap or would I have given it for a pen drive for a movie person? What I would have done? If I'm not starting CA final class, what I would have told him? Don't sell it as scrap. You will only get 200 rupees. Give it to him. He will give you 350 rupees. 150 rupees extra we are getting. We would have got 350 rupees. Yes or no? So if we would have not started CA final class, I would have got 350 rupees. Now because I am starting CA final class, I am sacrificing this 350 rupees. So what is this 350 rupees? It is the realizable value or benefit from alternate use, whichever is higher. If we don't take the decision, what we would have done? Either the realizable value or benefit from alternate use, whichever is higher we would have chosen. So now what we are sacrificing is the realizable value or benefit from alternate use, whichever is higher. Is it clear, students? Do not believe me. Do not try to by heart anything. Just put yourself in the situations. You will tell the answers yourself. It is just about building that atmosphere. Yes, asking the questions. Ask the right questions, you will get the right answers. Is it clear? So now let's have a look at this one more time. Yes, raw material. We are calculating the relevant cost for raw material. If raw material is not in stock, I have to purchase. So purchase cost is relevant. Raw material is in stock. If it is regularly used, I need to replace. So the replacement cost is relevant. It is not regularly used. What I would have done? Either I would have sold it as scrap. I would have got realizable value or benefit from alternate use. Whichever is higher is my relevant cost. Whichever is higher is what I am sacrificing. So whichever is higher is my relevant cost. Is it clear, students? Yes, any doubts? Do not worry, tomorrow morning we will revise it again. At the end of concept, we will revise it again. Yes, I promise you, I will not allow you to forget things. Yes, yes, I always tell in my class. Yes, there is one thing, a boy loved a girl. Okay, yes, but she left him or he left her, whatever it is. Okay, yes, at the end, she just wrote a note. She or he just wrote a note. Link, no, I am your ex. Even if you try to forget me, I will not allow you to forget me. Yes, that is what I am. Yes, even if you want to forget costing, even if you try to forget the concepts, I will not allow you to forget the concepts. We will keep revising so many times and ensure that you do not forget even a single concept. Now, we have discussed whatever we wanted to discuss for today. So now what is required, students? A comprehensive revision of whatever we have done today. So let us start from scratch. Decision making, a very important chapter from the examination perspective. We are discussing the first concept, that is the basics. First, in that we have discussed the basics of decision making. We have told any decision we are taking not based on total cost, we will be taking it based on marginal cost. Yes, how do we take a decision? We compare marginal cost with marginal revenue. Marginal revenue is higher, we accept. Marginal revenue is lower, we reject. Yes. What is marginal cost? What all is there in marginal cost? Variable cost will be there. If there is additional fixed cost, that will be there. And if we are sacrificing any opportunity cost, all these three together will contribute the marginal cost. Next, we looked into the basic formulas. Firstly, contribution. It is sales minus variable cost. Next, sales, I can split it as variable cost and contribution. Variable cost percentage is variable cost ratio. Contribution percentage is PV ratio. Break even point, no profit, no loss. Break even point is going to be fixed cost, total how much I should pay divided by contribution per unit how much I am getting. BEP in terms of rupees, it is fixed cost divided by PV ratio. Next, margin of safety is the sale in addition to BEP sale. After BEP sale, how much I am getting, that is my margin of safety. Yes, from my total sale, whatever I get will be my total contribution. From my BEP sale, whatever is the contribution I will be getting is my fixed cost. From my margin of safety sale, whatever is the contribution I will be getting will be my profit. Yes, next, sales to achieve desired profit or loss. What we do is, for our profit, we add the fixed cost, we get our desired contribution. Now divided by contribution per unit or PV ratio, we will arrive at the desired sale value in terms of units or in terms of rupees. Next, we have looked at differential formulas. Two things we have told. Firstly, the difference in variable cost is equal to the difference in total cost, because in fixed cost there is no change. Second, the difference in contribution is equal to the difference in profit. Why? Because in fixed cost there is no change. So what is my variable cost ratio? It is change in total cost divided by change in sale into 100. What is my PV ratio? It is the change in profit divided by change in sale into 100. I hope things still here are clear. Yes. Next, concept 1C, relevant costing technique. What is a relevant cost? It is the cost relevant to take the decision. That is, it is incurred only if we take the decision. Otherwise, that cost is not incurred. Two conditions: cost should be a future cost and it should be an incremental cost. That is, it is incurred only if we take the decision. Yes, we looked at 4 items. First one was historic, committed, sunk cost, irrelevant. Fixed overheads, if it is existing, allocated, irrelevant. Additional is relevant. Opportunity cost, always relevant. We are sacrificing, it is always relevant. Out of pocket or additional cost is also relevant. Now we have looked at, yes, relevant cost for material. If material is not in stock, I should purchase, so the purchase cost is relevant. It is in stock, I ask, is it regularly used? If it is regularly used, if I use it here, I need to replace it, so the replacement cost will be relevant. But if it is not regularly used, it was obsolete, it was non-moving, it was a special stock, then what I would have done, I was thinking to sell it off as scrap, so I would have got realizable value. So the realizable value or benefit from alternate use, whichever is higher, will be the relevant cost. This was all about today's session. Go back home, students, revise all the concepts, prepare your own short summary notes, solve the questions, keep the excitement going, and see you tomorrow evening at 6 p.m. Keep studying, keep smiling, keep rocking, rock stars, and with the same energy and even more excitement, see you guys tomorrow. Thank you so much, students.